All right. Hello, everybody. Welcome back to another episode of the Market Close. We are back after a 3-day hiatus, and we got to cover what's happening as we end out on the Market Close, which is a day in the markets that, quite frankly, although the title in the video is Slight Market Recovery, when I mean slight, oh boy, do I mean slight. It is a very slight market recovery. And quite frankly, I made that title an hour ago when the market actually was showing a bit more of a recovery. We're not really there right now. So as we get into the final 15 minutes of the market close, we had the bottom of Palantir at 89.30. We're at 90.53. Literally 5 minutes ago, we were at 93. So as you can see, as we get into the end of the day, this is not bullish price action at all. Now, Robinhood bottomed at 47. It's back at 50. It was almost at 51. So still a little bit of bearishness there, but a bit of a reversal from the 11.15 lows that seem to put an intraday bottom, at least for today, Monday, February 24th, on the broader market. Baba's down 10%. China's down 3%. NVIDIA tried to go green during the day. That was down. That's looking like it's going to end 2% down. MicroStrategy down 4%. AMD down 2%. Oklo down 12%. Another speculative name. Doesn't really have earnings, revenue, EPS, any of that stuff. That one's down 13%. SoFi hit 1381, now at 1444. That's down 1.6%. Rocket Lab's down 4.5%. HIMS, somehow this thing is actually green, up 4.5%. We have HIMS earnings today. We'll talk about HIMS, Tempus AI, Zoom, and a couple other companies that are reporting. So we'll get into their previews in just a second. But overall, the broader market, SMCI down 6.5. I mean, really didn't have that much of a recovery. It's better than the 11.05 or 11.15 lows that we saw on the market open. Initially, we had a 10.09 low that got breached at 11.15. We haven't breached those levels since that time frame, but it was a nasty day. It was a nasty, nasty day in the broader markets, and I would imagine everyone's year-to-date returns definitely took a little bit of a hit like mine's did today, as we saw some ugliness throughout the rest of the day. Now, today's going to still be really important. We got HIMS earnings. Obviously, NVIDIA is going to be on Wednesday, and that's going to be the one that kind of really determines where this market goes. But we do have HIMS. We have Zoom. We have Tempus. Zoom is, I guess you could call it important in enterprise SaaS, if we even qualify it as enterprise SaaS. This is a name that Kathy Wood still has a chunk of. I don't expect there to be anything substantial. Zoom grows like 5% a year, so not going to be too big of a mover. Tempus AI is going to be an interesting one because Tempus is Nancy's pick, and Tempus is still up now year to date. I believe about 75% year to date. This stock is up. What do we got? 106%. So this one's still going to be a big one. I know a lot of people got into it because of Nancy. And then you got a HIMS, which has just been an absolute monster. HIMS right here, I believe, is up more than 100% for sure. Yeah, 104. Oh, wow. Tempus is actually outperforming HIMS year to date. Last week, HIMS was up like 150% or 120%. But this is going to be an important one. We will be listening to the HIMS call at 5 p.m. So for those that are very interested about HIMS, I will be listening to the call for the first time with all of you guys. I have no idea what to expect. I don't know much about management, much about the CEO or anything like that. So it'll be the first time I listen to what they say on the call. But I don't know, dude. I think the implied volatility on this one is 15%. So either it's going to go really up or really down. But we're going to find out soon in about 10 minutes how this ends up plays out. First poll I'm doing right here in the chat is which stock do you think outperforms on earnings? And I'm going to put HIMS, I'm going to put Tempus, I'm going to put Zoom, and then I'm going to put Riot. We also have a Bitcoin miner reporting today, so let's see what ends up happening with Riot. Bitcoin relatively flat today, nothing too crazy. It hit 93 on the lows this morning. Currently right now, 94.5, nothing too crazy. But Bitcoin as well, feeling some of the pain, right, down about 4% of the day, that a lot of the rest of these growth stocks felt as well. In terms of what's happening with SMCI, look, they don't have to literally file the 10K today. I believe they have till tomorrow, 11:59 p.m. I could be wrong on the details on that, but I'm pretty sure it doesn't have to be today. I know some people are imagining it would be today after hours. They're not literally going to wait until the assignment is due. They would, have a little bit of cushion of safety, but who knows? We're going to find out today after the bell if they report their 10K or if not. Now, they did file their 8K. Their 8K means they're likely going to file their 10K, so I think it'll be okay. Maybe they're just waiting until the last second, but we're going to find out what happens after the bell today and definitely after the bell tomorrow. Palantir right here, $90.29, down 10.9%. Was not really able to find any support. It got a little bit of a bounce up to 93, call it 20 minutes ago, and was kind of holding on to that level. And then basically every single stock. It got to 93.79, and then every single stock at that same moment, called this around, basically at 3 p.m. So call it about 45 minutes ago, ended up taking a dip, and now it's 8 cents away from 89. Would not surprise me if we close below 90, but we got 10 minutes left to see how that ends up playing out. Robinhood as well, good day. I mean, good reversal from the absolute lows at 47, but obviously not the best day. Still down 2.38%. They did get resolved from that SEC case, so that was a bullish catalyst for them, but not enough to get the stock to be above 53, 54. It is holding that $50 support though. So Jason so far has been correct on this thesis that $50 will serve as support for Hood this year. Nubank 11.14. This one's up 3%. It was up 8% at one point, so that one chopped off about 5%. Hims again still up 3.4%. The S&P 500, even with all the red that we're seeing across the board, I mean, S&P is barely down. It's down 0.28%. So it's like, it's just one of those things where throughout the day, I mean, although it's ugly to look at individual stocks, the broader market is not getting hit as badly as some people thought it should be getting hit, given all the pain that we're seeing. And as a result, I don't know, it's just hard to be super upset at this market because it has obviously rotated away from some of the big names, definitely some of the big growth stocks that have benefited in 2025. And it's not really down as much as people would think it would be down. These are the crypto markets. $110 billion have wiped out from the crypto markets in the past 24 hours. So definitely there has been some liquidity or some liquidity events that have been happening in the context of crypto. Overall, Bitcoin, at least holding on to 94,000, has not been too bad. Anthropic also finalized a $3.5 billion funding round at a $61.5 billion valuation. So the AI mania is not slowing down. Anthropic, creator of the Claude chatbot, closing in on a $3.5 billion funding round, boosting its valuation to $61.5 billion. Anthropic's annualized revenue is about $1.2 billion. OpenAI, I believe, is around $5 billion. But OpenAI valued at about quadruple what Anthropic is valued at around 260 billion versus 60 billion here right now. Wow, Big Bear AI is at 5. I didn't even look at that one. Let's look at the spec names. I was looking at like all the other big companies today. Didn't get a chance to look at those. So let's go to the spec portfolio. Yeah, we're red across the board. Wow. Big Bear down 11%. Archer down 7%. Soundhound down 8%. MSTR down 5%. GameStop down 5%. Oklo down 12%. All the quantums getting hit. D-Wave down 11%. QUBT down 7%. Rigetti down 5%. IO&Q actually holding up nicely today, only down 1%. AMC down 2%. And then Faraday Future down 7%. So all your spec names getting hit along with regular tech names, which begs the question, what was red on the day? What was red on the day? Well, let me show you guys. Let me show you what was green on the day. It begs the question, what was green? By the way, Tempus AI going into earnings, that one ending up kind of green on the day, up about 2%. Here's what was actually green. Here's where the market rotated to while everything else got sold off. So you had Nike that got a big upgrade, and Nike is green, 5%. You've got Berkshire Hathaway hitting an all-time high, ironically, after Buffett released his latest shareholder letter. That's up 5% on the day. Apple goes green. Pfizer goes green. Delta goes green. PayPal goes green. Verizon goes green. And Disney goes green. Fubo was green. Estee Lauder was green. I know BlackBerry was green. So some of those other speculative names were green, but these were kind of the main green names I saw. So the market was selling off risk for iPhones, cell phone service, Disney parks, and Jordans is what I got from the market. In all seriousness, I guess the market's kind of consolidating into something that isn't as risky. I guess you can argue Verizon is not risky in a recession. You can argue that Pfizer potentially is good if there's any fears of pandemics or anything. And I think that's kind of like a sympathy green today because of the whole COVID stuff that we saw on Friday. Berkshire makes sense. Value play. Nike actually got an upgrade by Oppenheimer today to $115. That's why I think Nike is green, but the street got very excited about that upgrade, particularly on their operating margins. And that's why Nike was upgraded up 4.9%, $80.28. Bill Ackman did buy another 1 million shares of this thing in Q4. So he is still loaded up heavily on Nike and Uber, which is now his biggest position. You guys are saying TMDX is green. Didn't take a look at them, but they are green. Yeah, wow. Transmedics up 7%. Real interesting pockets of the market were green today, to be honest. Apple still holding green. Nubank holding on to its green. Palantir barely holding on to 90. But if you were in a growth name or in a name that has been up, call it 30, 40% year to date, it's probably not up that much year to date given some of the pain that we're seeing here today. Netflix goes red, Coca-Cola goes red, Grab down about 2%. It double bottomed at 467. So I think if we break below 467, that's bearish. We hold above 467, that's actually very bullish. But Grab right here at 42, Uber at 76, that's on 3%. And then Tesla was at the lows of 326, rebounded a little bit on 330. That FSD China news in the morning was like good, but it was not enough to kind of change the narrative of some of the pain we're seeing on the stock. Okay, this stock, RNMBF, German defense stock, is up 7%. The reason it's up 7% is because we finally got an announcement from Germany, and that announcement is that they are discussing 200 billion in euros for emergency defense spending. It's a lot of money. 200 billion euros is a lot of money. I actually thought Palantir would go green on that. It ended up selling off even more. So either the market kind of doesn't care about it, or the market doesn't feel the perception of this news is that it'll benefit Palantir, for a good reason, because, you know, Karp has said that Germany has had a very hostile relationship with Palantir. But I mean, if they're spending that much in defense spending, I would imagine that would not be the worst thing for Palantir. So we had that piece of news as well throughout the day. The cruise lines were green as well. They're kind of rebounding off of the tax news from Howard Lutnick the other day, who said that they should be taxed. But in general, I mean, nothing. It just wasn't too crazy in terms of different pockets of the market that ended up going green versus that continue to stay red as we get into the close. We did have Trump address the media today. He was talking about a variety of different things. He was with Macron, who is they talked about a bunch of different things. Here's Trump on this whole Elon, what did you get done at work today message that he sent out over the weekend.
Last week, agency heads then told people to ignore it, but Elon Musk.
About the last email that was sent, where he wanted to know what you did this week. You know why he wanted that, by the way? I thought it was great, because we have people that don't show up to work and nobody even knows if they work for the government. So by asking the question, tell us what you did this week, what he's doing is saying, are you actually working? And then if you don't answer, like you're sort of semi-fired or you're fired, because a lot of people are not answering because they don't even exist. They're trying to find, that's how badly various parts of our government were run by, and especially by this last group. So what they're doing is they're trying to find out who's working for the government. Are we paying other people that aren't working? And, you know, where's all that? Where's the money going? We have found hundreds of billions of dollars of fraud so far, and we've just started. We're actually going to Fort Knox to see if the gold is there, because maybe somebody stole the gold. Tons of gold.
Some of the agencies.
So I think it was actually, there was a lot of genius in sending it. We're trying to find out if people are working. And so we're sending a letter to people. Please tell us what you did last week. If people don't respond, it's very possible that there is no such person, or they're not working.
Some of the agency heads instructed their employees not to respond because they were waiting on further guidance. But Elon Musk's tweet said a failure to respond would be taken as a resignation. So there's been a disconnect in communications. Yeah. Are you concerned at all about that?
No. That was done in a friendly manner. Only things such as perhaps Marco at State Department, where they have very confidential things, or the FBI, where they're working on confidential things. And they don't mean that in any way combatively with Elon. They're just saying there are some people that you don't want to really have them tell you what they're working on last week.
So that was Trump. Hopefully the lag is gone, guys. We got about a minute until the market closes. That was Trump with Macron, and they were talking about a bunch of different things. There's some other clips we'll listen to after the earnings. But yeah, essentially he was defending Elon's statement to federal employees of having to defend what they got done at work last week. And he said a bunch of other things. He said some stuff about Russia, Ukraine. He said the tariffs are definitely going into effect. So you could see, you know, a little bit of market volatility just based on him kind of confirming that the tariffs are definitely happening. I don't think anyone really has a clue exactly what's going to play out over the next month, but Trump is steadfast on ending this Russia-Ukraine war and getting tariffs implemented pretty soon. Along with Apple reinvesting $500 billion into the United States. I mean, that was another headline this morning. Apple's probably going to be avoiding some of those tariffs because of that investment. And so we're going to see over the next coming months what other companies kind of join Apple to hopefully get rid of those tariffs by continuing to invest in the United States. All right, here we go. 4 p.m. Monday, February 24th. We got a lot of earnings. The stock market is now closed. right, we've got 4 companies on the deck: Tempus, Riot, Zoom, and Hims. Let's take a look at how the rest of the market performed, and then we will get right into those earnings, which should be happening very, very soon. Mag 7, Apple, one of the only green ones on the day, up about 0.5%. Microsoft was down 1%. Meta, 668, down 2%. Google, down 0.21%. Amazon, down another 1.7%. Nvidia, look at that, 130. Ends at its lowest level on the day, down almost 3%. And then Tessie, 330, that was down about 2.15% as well. Palantir ends the day at $90.68, so at least we closed above 90. But 10% is 10%. Definitely not fun to see 10% down, but we are 10% down on Palantir. We might get SMCI news after the bell. I'll keep you guys updated on that. 51.75. It was down about 8% on the day. Robinhood ended below 50, 49.93. I still have not bought the Robinhood dip yet. I will let you guys know when I do buy the dip, but I have not bought it yet. Alibaba ends the day down 10.25%. Coinbase ends the day down 4%. CleanSpark was down about 4%. Fubo was actually up about 7%. Vertiv, another data center play, down 5.19%. Dell, data center play as well, down 2.93%. And then you had Micron, another semiconductor play, that was down 4%. So a lot of red still throughout the broader markets. Tempus is up 5%. All right, Tempus is green. Tempus is green. On the poll, 58% of you said Hims will outperform. 58% of you said Hims will outperform. So far, Tempus is green. I think we get Hims numbers in probably a couple minutes. Zoom is flat. Riot is up 1.3%. Tempus just gave back all of their gains. It was up 5%. Now it's flat. That might be a head fake. We'll see if it goes red in a second. And let me know in the chat if you own any of those 4 names. I think the majority of you guys own Hims. So that one will be the important one. Let me pull up the expectations from the street. So the street is expecting on Hims, they want 470 million in revenue and 10 cents of EPS. So that's what we are looking to beat. Hims not out yet. Tempus now is down 5%. Yep, that looks like it was a head fake. The street wanted on Tempus $202 million of revenue and losing 15 cents a share. Let me pull up if we have their numbers yet. Yeah, Tempus, wow, double miss. 200 million and 18 cents they lost. Double miss for Tempus. That one is down 3%. Again, Tempus was up 110% going into this year to date. So part of the reason also because Nancy bought. Now Tempus is going green. Looks like the street doesn't care anymore. But now that one is going up. I think it's going to take a little minute before we see what that price action looks like. Steph says I have 7,700 shares of Hims. Wow. We got some Hims whales in the chat. I'm more of a hers guy, if you know what I mean. You know, so like, you know. Anyway, dude, I can't believe you guys didn't back me up on West Wing. Which I'm still mad about that. I'm still mad that you guys did not have my back about West Wing. I'm just like, I really thought I could have counted on you guys. No, I couldn't. All of you guys said it was good, not great. All of you guys. Can't believe. Oh, someone said Grinder was up today as well. Where's Grinder? Yeah, holy crap. Grinder hit a new 52-week high. Wow. Shout out to Grinder. That's random. On the most red of red days in 2025, Grinder's up 6%. That is definitely random. But there you go. Grinder was up $19 today, or at $19 today. Hims right here, still flat after hours. We don't have Hims numbers yet. Let's see. Tempus still with a double miss. Zoom. Do we have Zoom numbers yet? We don't have Zoom numbers yet. We don't have Zoom, Hims, or Riot. We only had Tempus. Marie says, I had your back. Thank you, Marie. Thank you to the 20% of people that voted on West Wing. I can't wait to watch another episode of West Wing. Like, I genuinely am excited to watch that show again. And like all of you were like, well, it's a crappy show. I was flabbergasted, dude. It's I wasn't asking you guys to have my back on Dawson's Creek. I was asking you guys to back me up on a IMDb rated 8.9 out of 10 show. I didn't think I was gonna go wrong there, but it is what it is. Okay, so we don't have Hims earnings yet. Have you seen Westworld? Yeah, I saw it. After season 3, they ruined it. Season 1 was really good. Season 2 was decent. Season 3, they just destroyed that show. But I haven't visited since then. All right, so Hims is still down. I think Hims earnings, it should be out right now, 4 or 5. I don't think they wait till 4:30. The call's at 5 p.m., so we should be getting the numbers really soon. Let me check the website. And let me see if we have any coverage on the other names right here. Hims is going green. Hold on. Are we going green? Oh, no, we're green. Yeah, we're green. We are up. No, now it's red. Now it's up. Now we're red. Yeah, now our results should be coming out right now. We are red. Let's see if it's real or not. It's down about 4%. Zoom's also down 2%. Riot's barely up. Hims kind of letting go of that 3% down. And now we're going a bit flat. Down for now it's not flat anymore. It's red. It's red. Let me see if I can get these numbers. I should get it really quick. Double beat. We got a double beat. I think you guys are right. We did get a double beat. It's a decent beat. 11 cents versus 11 cents expected. That's in line. And then 481 versus 470. They beat by 11 million on revenue. I guess it's not the craziest double beat, which is why the stock's not going higher. Down 7%, getting some recovery at 46.99, basically where it was last Friday. I mean, this isn't that interesting when it comes to price action, but we are red. Zoom is down. Zoom, I'll try to get a Tempus. Oh boy, Tempus now definitely getting hit. Tempus down 10%. Tempus down 10.4%. Tempus had a double miss, and now the street's factoring that in. Hims is down 5%. Dude, Hims is resilient, though. I mean, this thing is not really going down that badly. It's not getting hit down that bad. Down 5.53. Is at 48.30 after hours. That's not too bad. That's not too bad at all. Riot is basically flat. Tempus down 8%. Zoom down 0.74. Let me see if I can get these Zoom numbers now. Zoom tends to grow like 5% every quarter. Nothing too crazy. Zoom missed on revenue, 1.18 versus 1.19. They beat on EPS, 141 versus 135. So we got a little bit of a beat on EPS. Nothing too crazy. A very slight miss on revenue. Again, nothing too crazy. Stock is flat. Hims, oh wow, Hims is down a lot now. Dude, this is like really aggressive moves. Now it's down 11%. It was kind of chilling out for a bit, and now we are getting hit. Yeah, now Hims is down. The implied volatility, I believe, is 15%, if I'm not wrong. So we should have expected up 15 or down 15. Right now we're down 12. Look, I mean, if you're a Hims shareholder, you can't be that upset. Things up 100% year to date. So even with a negative 15 print, I think you still got to be okay with it. But this thing, kind of like Palantir, the thing got to 73. Palantir got to 125. And like one could argue Palantir didn't deserve to get there. One could argue Hims did not deserve to get there. So the fact that it's getting hit now is, probably more reasonable than not. Riot earnings are not out yet. I don't have their numbers. I should have it in a second. Oh, Realty Income, they're out. Let me I forgot these guys were reporting earnings today. This is ticker symbol O. They are down 0.58%. They missed on EPS. They missed on EPS badly. They missed by 14 cents on EPS, or 15 cents. 23 cents versus 38 expected. 1.2 billion versus 1.2 billion revenue. So they beat on revenue, missed on EPS. That stock's flat. There is a nice 6% dividend on that stock. Tempus down 7%. Wow, Hims 14% down. 14% down is what we're seeing on Hims. 43.25. It makes sense with the IV. It was going to probably get to those levels. That's down. That is down. I think management's going to have to calm everybody down on the call when it comes to the shortage and when it comes to the GLP-1 narrative that the stock's been really riding on. And I, we'll see what Andrew. I've never heard Andrew as a CEO talk. I think his name is Andrew Dunham or something. So today will be my first day listening to him. But the type of cult that exists for Hims on Twitter, dare I say, is up there when it comes to stock cults. I mean, people really love this name. So this is gonna be my first day kind of listening to the CEO and who they think can really get them to become. I've heard this thing is going to go to $200-300 billion. It's at $11 billion right now. So going to be curious to see how management takes this call and what they end up saying. Zoom right here down 4%, Tempus down 9%, Realty Income or Realty Income down 0.14, Zoom 4.3, Riot flat, still don't have their numbers yet. Hims down 13.58% here right now. Let me see if I can pull up some of these numbers here. and see what we've got. Okay, let's pull this up. All right, yeah, we got him. So here we go.
All right, Christina, Kevin, thank you.
My pleasure.
Well, Hims and Hers health earnings are out. Brandon Gomez has those numbers. Brandon?
Hey, John. Yeah, look, you can see shares of Hims and Hers. They're moving lower despite the fact that they were a beat on the top and bottom line, down just about 10.5% now. Now, again, this is a stock that's been moving based on these GLP-1 headline and news updates. However, I will point out the fact that the company says total revenue excluding GLP-1 was about $1.2 billion. So that makes about $280 million for last year in 2024. They did say guidance for 2025 was coming in above consensus estimates. Again, a lot of that has to do with their expectations for not just their GLP-1 offerings. They just acquired a peptide facility. They're going to be expanding into blood work at home for some of their users. We're going to hear more on the earnings call at 5 o'clock. I did just get off the phone with the CFO. He said, we're not in the business of circumventing regulation. You have that FDA news out on Friday, which has impacted the stock because now this company is not going to necessarily be able to offer some of those semaglutide compounded drug offerings. Again, perhaps that's what's weighing here on the stock, down 15%.
Yeah, 43, 44. That's about where it was 2 weeks ago. Give an idea of how fast this thing has been moving. Brandon, thanks.
Yeah.
Well, Diamondback Energy earnings out as well. Pippa Stevens has those numbers. Pippa.
Hey, John, it's a top and bottom line beat for Diamondback during Q4. EPS coming in at 364 adjusted. That was ahead of the 335 that Wall Street analysts were looking for.
Energy actually not having a bad year so far. Energy's been relatively decent, so it makes sense that Diamondback's doing okay. But growth names definitely getting hit a bit more than expected. Hims now down more than 15%. This kind of was expected though, right? I mean, stock was up a lot going into this earnings. A lot of it's been driven by narrative. I know their growth is still amazing, but I feel like, I mean, obviously hindsight is always 2020, but kind of made sense, right? Even with Palantir also made sense at 125. It was eventually going to take a breather. Hims is taking a breather to prices that it saw last week. Nothing too crazy. I'm just curious who the hell bought it at 70. Because again, the stock is a high short float, right? 27%. Someone said in the chat. So unless the I'm convinced institutions were buying Palantir from 90 to 120, but basically after Q4 earnings, right? Because I just don't think you move $100 billion with retail. So the institutions are bag holding right now, which it is what it is, right? For Hims, I don't know. Were the institutions buying this thing with a 30% short rate? Or what was it retail? That was about like who was buying it at $65, $72? Like, I don't know. And if it was, then there's definitely some new bag holders that have been created on Hims. Now, granted, the stock is so damn volatile, it wouldn't surprise me to see it go back to 70 anytime soon. It's just now in this macro environment, it's gotten a little tough to imagine sort of parabolic moves, especially getting into tax season where people are going to have to sell to pay taxes. I mean, we're definitely going to be a little suppressed for a little bit in terms of some of these stocks, which is okay. That's fair. I mean, that's healthy. But yeah, we might see a little bit of a breather on a bunch of these different names. A lot of people from X were buying it at 70. Yeah, I would imagine. I'd like my bet is that this was retail versus institutional. Like, I just don't know if institutions care that much about Hims. Let me actually check the institutional float on this name. Hims stock. Let's see. Palantir is about 55%. Institutional is 27.8% is what I'm looking at. 27.8%. So about 30%. So not 50 yet, but still making good progress to get there. I guess we're going to have to see. We're going to have to see what happens with this one. Tempus is down 5.5%, recovering a little bit. Riot, I still don't have their numbers yet. Let me see if I can find their numbers right here. This is a Bitcoin miner. The Riot's been great if you've been wheeling it. If you've been owning the stock for capital appreciation, has not really done as well. But in terms of wheeling, it has been a money printer for puts and calls. Don't have their numbers yet. I don't know if their numbers are out. But the stock is reacting up about 1% after the bell. Yeah, no Riot News net yet, Scott. I don't see it yet. Not anywhere. SMCI, no 10K is out yet either. SMCI is flat after hours, but down 7.95% of the day. You know, what was really funny, someone brought it up in the market open. I thought I don't have to worry about SMCI anymore. And then I realized I own NVIDIA. And I don't think it looks good on NVIDIA if one of their biggest suppliers doesn't put out their 10K. So I still think I have to be concerned about SMCI. Like if they fail to put out the 10K, which again, I really don't think they're not going to do. I think they're going to put it out. But let's say they don't. Like, how does that make NVIDIA look? it looks kind of bad, right? Like NVIDIA, like that's just not good for one of NVIDIA's top suppliers of servers to not be able to report their stuff on time. So I am pretty confident they'll report it, but if they don't, I think NVIDIA shareholders are not out of the blue either when it comes to what would happen with SMCI. I think they're going to ask for another extension, dude. If they, I really don't think they will. I'm just hoping there's competence in that company and they're good to go. And like 5 months was enough of an extension. HIM's now down 16.5%. But I guess we'll find out tomorrow. Someone said they have till 5:30 tomorrow. All right, well, I guess we will see by 5:30 tomorrow. HIM's now down 17.2%. This one cannot catch a break, dude. 42.50 was the bottom. Right now at 42.78. Really just getting hit. It was actually up green on the day, which was funny that it stayed green while the rest of the market took a beating. Did I say out of the blue instead of out of the woods? Of course. Of course. This is dude, I'm bad at pronouncing words and phrases. Words and phrases are not my strong suit. Like I just can't get the right ones. HIM's moved 15% from low to high today. Crazy. Yeah, it's down 16% right here. If it drops below 42.45, we're going to be down almost 18% on the day. Friday was down another 8% last Friday. This one's definitely getting hit. Do you think we'll see any green this week? We already saw some green today. I mean, again, we saw some recovery on a lot of these names. It's just towards the end of the day, some of that recovery was wiped out. Palantir right here at $90.42 after hours. Like even Hood, 47 to almost 51 today. That was a nice little move in terms of recovery, but just wasn't able to hold it. I don't know. I think if NVIDIA crushes, then yes, we have a little bit more momentum. But again, I'm in the ball camp that it's okay for this pain to be happening because people are still up a decent chunk after feeling this pain. And it's probably healthier that we go through this pain right now than going through this pain in the summer. And again, I shared this chart on Twitter. I shared it in the morning, but seasonally, this makes sense. On post-election years, February is when the market actually tends to bottom. I mean, like we maybe this is not the bottom. Maybe we have much lower to go, but late February tends to be when shit hits the fan on post-election years in particular. And by August is when you kind of top out. December still ends up being green, about 15% on the S&P versus where it started in January. So I think it's actually quite natural that we're seeing some of this happen. But it's happening. Trade Desk as well. Yeah, that one, dude. That one I still have not looked at. I know a couple people that have started buying this name. No one that you guys know, but just like some random accounts on Twitter that I follow. 74.20, that was up 3% of the day. This one needed a bounce. I mean, if this one didn't bounce, then it's almost like what the hell is going on with the company. I just don't understand enough about advertising technology to feel comfortable on this one. I also feel like if I want advertising exposure, like Google and Meta are just like easier, sleep well at night type of buys. Google right here, 181 was down 0.21% of the day. And then where's Shopify today? Shopify as well was flat. So I don't know. TTD maybe is a good candidate to sell puts on, maybe a good candidate for bottom fishing, but we're going to have to find out how this one plays out. Zoom, let's get coverage on Zoom earnings and see what we've got here.
Quarter, the company reporting a 9-cent beat on its bottom line while sales came in line with what Street was expecting, but it did surpass analyst forecasts on some key metrics like enterprise revenue and operating margins. I would point out operating margins of 39.5% versus a 37.9% estimate. And looking at the stock, it was down as much as 5% when the earnings came out, but have now narrowed those losses down just about 3.8%. We know there's been this active bull versus bear debate, John, about the return to office, whether it's pressure coming from Washington or what JP Morgan CEO Jamie Dimon recently said, but what that could mean for these virtual conferencing call apps like Zoom. We'll see stock now down about 4%. That earnings call does begin at 5 p.m. and we'll be on it. Back to you.
Modi, thank you. Let's take a breath now. Get to see me more.
Okay, so that was Zoom. Nothing too crazy on Zoom. One thought on Google, or one headline on Google here. They did win a $2.5 billion contract today with Salesforce. So Salesforce picked Google Cloud instead of Amazon or Microsoft to handle some of their AI agents infrastructure, cloud workloads that they need to run all this stuff. and they picked GCP. So, I mean, that's bullish. Google, $2.5 billion contract. They won that over Amazon and Microsoft, which is good. Stock really didn't react to that too much, but that was one headline that was good for them today. Riot is up 0.5%. I still don't have the Riot numbers, guys. I can't really find them here. No one on Twitter has them either. Let me check their website real quick. Riot investors news. Do we have it? No, we don't have anything on Riot. Yeah, so no one has it because they haven't announced it yet. So maybe at 4:30 they come out right before the call. 10 minutes. Okay, cool. So at 4:30 we'll get Riot right before the call. GitLab has earnings this week as well. This is a name a couple people were telling me about. I don't know enough about them. I do think that some people's thesis on it is correct and it is undervalued. As an earnings play, I think I would have to just know more about the name to get into it. But I have a couple folks that like this name going into earnings. Google was actually going to buy out this company a while ago. They started accumulating a ton of shares back in 2021, but I think the deal kind of just never went through. I don't know if Google still owns a ton of GitLab. I'm sure they probably sold off a decent amount of their stake. But $10 billion company. GitHub got acquired by Microsoft for $7.5 billion. So there's definitely people that think there's room to run for GitLab. But that one has earnings later this week as well. Palantir just under 90 after hours, $90.01. It's very close to going under 90. Nike still up after hours. Apple still up after hours. Baba still getting beaten after hours, down 0.5%. And then Hims, let's get an update on that. Hims is still down 16.5% on the day. Yeah, Hims at one point was down 18%. Yeah, wow, 41.92. So we broke 42.45. That's aggressive, dude. That's aggressive. Let me pull up the entire Hims release. Let's actually go through that and see what they said besides just the top line numbers. Okay, here we go. Hims. This is the first time I'm actually going through these numbers. Let's see what they look like. Any thoughts on Novo Nordisk? I don't know enough about the company. I do know that they've been benefiting off of a couple of different things via FDA headlines over the past 2 weeks. I just don't know if like the valuation is really attractive on that name. Revenue of 1.5 billion, up 69% year over year. Net income of 125 million. Subscribers grew to 2.2 million, up 45% year over year. So great growth on subscribers, revenue, and obviously they are now profitable. CEO says 2024 was a fantastic year at Hims and Hers as we continue to build a platform that leverages personalization and technology unlike any traditional healthcare system. Over 2 million subscribers now entrust Hims and Hers to aid them in their journey to better health, with thousands more joining daily. In the coming years, we expect to further transform how individuals can improve their health with more comprehensive treatments, technologies that normalize unlimited follow-up support, and tools that can eventually be exported beyond Hims and Hers, enabling more Americans to access this care. We believe an ongoing focus in these areas will allow every household in the country to access high-quality precision care that is convenient and affordable, and expect 2025 will be another step towards this vision for the next generation of healthcare. Okay, cool. CFO said the success we are experiencing is a direct reflection of our improving ability to democratize access to high quality personalized care across our specialties. Revenue, excluding our GLP-1 offering, increased 43% year over year to 1.2 billion. So they did 300 million in GLP revenue, 1.2 billion without it. I think that's reasonable. Everyone says Hims is only making money because of GLP. Well, that's not the majority of their revenue from what I'm looking at. It's not crazy. Consolidated revenue increased 69% year over year to 1.5 billion. We believe this signifies our platform's growing ability to enter new specialties and scale rapidly, further establishing confidence that we are building a set of core capabilities that can scale with tremendous efficiency. Net orders, 2.8 billion. Average order value, 168. So that's up 22% and 63%. Respectively. 73 monthly online average ARPU, that's up 38%, and then subscribers 2.2 million, that's up 45%. Yeah, that's not horrible. I mean, that's growth. It's a growing company. It's just the stock is, more than reflected that growth, but no one can say this thing is not growing at all. Someone said CLF had earnings today. CLF, did they have earnings? Cleveland Cliffs. I used to follow this name a while ago, down 1.75%. Let me see if I can get the numbers on them. Riot, we should get in about 5 minutes. I think you are right. I think CLF did have earnings. So let me see if I can get those numbers. Palantir, 90.15 after hours. Micron, down another 0.09%. Nubank holding up a little bit after hours, 11.07. Coinbase, 2.27. MicroStrategy, still down 6% on the day. And then SoFi, 14.35 currently after hours. Where is Hims? Hims is, there you go, 18%, 18.25. That's aggressive. Amid, if SMCI reports, will they go up? Well, that's the $1 million question, or rather the $30 billion question. Honestly, dude, I would have said a week ago, yes, but now I don't know if it's priced in. So I don't know. I really don't know if they, at this point, I think SMCI shareholders just want them to release that 10K so that the company doesn't get delisted. I don't know if the stock moons on the 10K. I would imagine it's going to get a bump. I don't know if it goes up, 20, 30%. But they're cutting it close. They are absolutely cutting it close at this point. It also depends on what the report says, right? This is also true. Isn't Amazon a risk to Hims? This was a bear case when Hims was like $15 and the Amazon news came out. I don't think so. Amazon's probably going to cannibalize some of their sales, but it seemed, here's the thing. I think Hims, and correct me if I'm wrong on this, if you're a Hims bear, I think it's kind of like Spotify, where Spotify, I was always bearish on Spotify because of two reasons. Number one, I didn't think they could get profitable. I was wrong on that. They became profitable. Now they're a $120 billion company. Number two is I thought YouTube Music or Apple Music was the same thing as Spotify. And so I canceled my Spotify and I went to YouTube Music and I was just like, all right, other people will do the same. In reality, people love the personalization of Spotify. And people's emotional attachments with music makes it very hard for them to leave the playlist and the ecosystem that they are used to when it comes to listening to music. I get emotional attachments with music, but I don't really care that much. I mean, whether it's on whatever platform it is, as long as I can access the music, I'm fine with it. But you got a lot of people that really do care about their music. With Hims, I think the personalization part of this is their quote unquote moat that defends them against Amazon competing against them. And that is what I think keeps them afloat and why the street really has not cared at all about Amazon entering the space with telemedicine. Also, will Amazon do as good of a job as Hims is doing? Amazon is occupied with like 1 trillion different businesses. So it's always a question, can the big guys actually keep up and just execute at the level that some of these smaller guys do? So I don't know. I think Amazon's not a bear case. It's definitely not a bull case, but I don't think it's a reason to like sell off Hims simply because of that. Cool. So we have the Hims call in about 30 minutes. We'll be listening to them and see what they have to say. Who's buying the dip on Hims in the chat? Let's do this. Let's put a poll right here. Who's actually buying this dip and who thinks it's an appropriate price to buy it? Who is buying the Hims dip? Who is buying the Hims dip? What is the market cap now? So it's down 20% basically. Wow, we're getting a lot of hell no's. I think there's like 50% of you guys that are bears, 50% of you now. Wow, yeah, now down 19%. Okay, so market cap was 11 billion, so let's shave off 20%. Market cap is now 8.8 billion, growing 70% year over year. Price of sales is 7 instead of 9. PE is 95. That's not the metric that I think matters the most. PE is probably like 70 now. I mean, it's definitely cheaper than it was before. It's a meme stock. I won't disagree that there's meme-ish components to it, but I don't think their growth is meme-ish. Their growth to me is rather bullish. It's just, the stock got really hyped up aggressively from retail buying and also people wanting to stick it to the shorts, which it's going to be a question. Do the shorts double down here? I mean, that's the other sad part about him, dude. Like this stock is already let me get their exact short float. Their short float is so high that now the shorts are going to be more encouraged than ever to keep shorting this thing. Yeah, 32%, dude. I mean, that type of short float is not going to be friendly to a name that falls 20%. Okay, cool. Let me get some other updates from the market in a second. Let's get an update on how some of the suits are thinking of current price action, and then we will keep going from there.
Investments, Alicia Levine of BNY Mellon Wealth Management. It's good to have you both here with us as well. Lauren, one of the knocks on this market right now is there's too much uncertainty. A lot of it coming from that town where the White House is located, D.C. How does that factor into how you view the market right now?
Well, I think that uncertainty is one of the key reasons why we've seen such balance in the market lately, actually. We have growth that's underpinning a reasonable circumstance for the most part, but I think the market is still seeing the positives and negatives of policy change as roughly balanced. Now, that, from my perspective, is potentially a precarious balance. We have the 10-year Treasury yield sitting right at 4.5%. That's right on the edge of where you start to get into the equity market danger zone. You have news around technology that's been a little more uncertain, policy uncertainty. You add all these things together and you get what looks a little bit like market paralysis. And there's 2 points I'd make about that. For
Okay, Riot's going green. Let me see if I can get the Riot numbers. Riot is green. Hims is down 18%. Riot is up 4%. Let's see if I can get these numbers in a second. Riot, again, is a Bitcoin miner. Should be getting the numbers very soon on this one, but we are getting a bit of a pump right here. By the way, Cleveland Cliffs, for the person that was asking, they lost 68 cents instead of 61 cents, so they missed on EPS by 7 cents. Revenue was 4.32 billion versus 4.31, so they beat on revenue. Nothing too crazy there. In terms of Riot, still don't have the numbers yet. Should be getting it soon. I think I got it. Is this it? Okay, here we go. Riot, where's the stock? Stock's up 4%. Riot's revenue of 376 million. That is up from 280 million. So that is a growth rate of 34%. Net income of 109 million. They are profitable for the year. Company produced 4,828 Bitcoin at an average mining cost of 32,000 a coin. That's actually really good. 32,000 a coin is like, that's cheaper than CleanSpark, right? That's like not bad. Riot's pump just went away, all of it. Key developments include the energization of the Corsina facility, acquisitions of block mining and E4A Solutions, a successful convertible senior notes offering of 579 million. They did do some dilution. Bitcoin mining revenue increased to 321 million, up from 189 million, so about 70%, while engineering revenue decreased 38.5 million from 64 million. The company generated 33.7 million in power credits, down from 71 million in 2023. CleanSpark's 40,000 a coin, if I'm not wrong. So if Riot's doing it for 31,000, like, that's good for Riot. Pump is 2%. 2% is the pump that we're getting on Riot. Still beating Hims with some green, but nothing too crazy. The thing about, again, the Bitcoin miners is that we need Bitcoin to go up. Like, if Bitcoin doesn't go up, I mean, this is just not, no one cares, right? I mean, if Coinbase beats EPS by $3 and can't go up because it's that tied to Bitcoin, Riot, CleanSpark, Marathon, I mean, none of these guys are really going to have any fun. Again, I think these are good stocks to wheel if you understand like technical levels, where to get in and out. But owning them as investments is just, I had my Bitcoin mining phase back in January last year, and I immediately realized like Hood was just the better bet to get exposure to crypto. So I think Bitcoin's got to move aggressively to get these names to get some love. Bitcoin right here, 94,256. That one's basically been flat all day. It's up from 93.5 when it bottomed. Palantir's below 90 after hours, 89.65. 89.65. Hims now down 20%. Goodness, dude. Wow, 20.1. This thing is 90 cents away from going below the 40s. Holy crap, dude. I have one friend who likes Hims, and he didn't have any covered calls. He just sold puts on it. He's been in the name since like $9, so he's been a Hims bull for a while. But I don't know. I guess Theta Gang wins today, at least on the call side. If you had calls on this one and you sold those calls, it was not too bad. Palantir. Let me show you guys this chart. This chart's been going a little viral on Twitter. There is a bit of a gap fill on Palantir in the low to mid 80s. Now, again, not every gap has to be filled, but some gaps do get filled. And 84.26 is kind of where you see a gap on the chart where this thing could get to. Look, if we fall to 84, to me, it's not because of a gap fill. To me, it's because the street is not okay with Palantir at this valuation. It's just like, to me, it's more about valuation becoming reality versus the narrative becoming less important. That's kind of when I talked about in the morning. I don't think it has anything to do with gap fills or anything like that. But street's kind of recognizing they don't want to pay the premium they're paying on Palantir. And in a month, they might decide that this premium's worth it and buy it at these levels, or they might not. But I guess we will find out over the coming months. Are you okay with the valuation? I mean, you guys know my opinion on this. I have not been okay with the valuation for a long time. I've said since it was freaking $40, like the valuation's aggressive, dude. And like, that's why it's funny, because when I argue with Steve, I'm arguing with him on a way to make sense of the valuation, not a way to justify it. And there's a nuance there. Steve doesn't think the valuation could ever make sense. And that's where I disagree. I'm like, no, there are ways to make sense of the valuation. Let's not use numbers, because numbers aren't fun to use. Let's use like words. Let's use like, scenarios and situations and all this other stuff to describe it. And sometimes the market runs on words and not numbers, narratives. But other times numbers matter, right? And so this is one of those situations where, yeah, the valuation has been pretty incredible for a very long time. And although I've been enjoying the run, I've also understood it's hard to justify numerically. Like, there's just no way. There's just no way you can justify 100 times price to sales. You can't do that. Like, you're gonna sound stupid doing it. You can find other ways to make sense of it, but to be like, yes, Palantir deserves this price, deserves this valuation. Right now, it's at 74 times price to sales. That's still freaking aggressive, bro. Most software companies barely get to 15 times price to sales. The only way you could really justify it is growth. Growth. The problem is Palantir is not growing like NVIDIA. Like, they're not growing 100% every single. If they were, I think I would even use the numbers to justify it. You could also use sort of Amir's argument on our podcast, where we use free cash flow margins going to 60% and then growth staying above 45% for the next decade. The question is, can Palantir actually compound that much for the next decade? Maybe. But as of today's price action, the street's not believing that, right? If they did believe that, then and they were using that as their DCF model, Palantir would be trading at a much higher level than this. So if you can't use those numbers, then the stock probably is going to settle down lower than here. The question is just where. Or the narrative's going to matter more than the numbers, and the narrative's going to outweigh, like it has been for the past couple of months, and the narrative's going to take more precedence. Like, any of those versions of reality are possible. The version of reality we've been living in so far has been the narrative over the fundamentals. And when I mean fundamentals, I don't mean the company's a shitty company. I just mean, like, aggressively, the valuation cannot match the type of growth Palantir is putting up, because Palantir still is in its infancy of getting astronomical growth, which I think will happen. It's just not going to happen overnight. And the stock price, unfortunately, overnight went kaboom, and it created a lot of unrealistic expectations. And now it's kind of settling back to normal, which is okay. I don't think that's the biggest deal in the world. I mean, remember, guys, I've been in this thing since 6. A lot of you guys have been in this thing since 6, 8, $7. Like, this is not something, at least for me, it's not something to get upset about, worry about, cry about. It's just, it is what it is. It's not, it probably was never supposed to be at 125. It could be below 89, but I'm not stressed about it. Also, it's like, just, do you know what you own, right? If you know what you freaking own, then it's not that nerve-wracking. No, I have not sold any Palantir, for those that are asking. That's, people might be thinking, oh, well, he's calm about it because he sold. No, I did not. Like, you either believe me or not, but I did not sell any Palantir. The reason I'm calm about it is because quite frankly, and hopefully everyone can believe me here, I have not been buying Palantir on this run-up. Ever since 35, I did not buy. The one time I bought Palantir was at $63 for 20 shares because I was getting annoyed with my share count with my OCD. The whole run up I missed in terms of adding to my position. And so, like, I am not going to sell my shares if I missed adding to my position during that whole run up. Number two, why did I not add that whole run up? Because I thought the valuation was too aggressive. And at 40, at 50, at 60, I was like, all right, this valuation is getting out of hand. But the valuation kept going up. And so I kind of sat back and just enjoyed it. But that doesn't mean I ever agreed with the valuation, which I think I've been pretty transparent on for a long time. We got people like Matt Money on the Palantir Weekly who have also been very transparent about how they felt the valuation has gotten out of hand, even though they think it could be $1 trillion company. It's just one of those things where maybe it's not happening in the moment. I did buy at 100. That's correct. But that was more so just like to celebrate 100. I bought 10 shares at $103. But in terms of buying like a real amount dude, my last real big buy was at 22. My last real big buys were in May of 2024 after Q1 earnings, when I thought they had a phenomenal earnings and the stock tanked. And that's where it is. So for the people saying you have to sell and take profits, it's like, no, you don't. Have I sold any Robinhood? No. I'm waiting to add even more Robinhood. Now, Robinhood's valuation I can make more sense of than Palantir. Palantir, even at 90, the valuation is still aggressive. But I'm excited if I see Robinhood gets to 30. If I see Palantir get back to, I don't know, 60, 65, I get excited for that. That's not scary. I just think the people that are screaming and upset are people that bought it at 120 and they're like annoyed. And it's like, I don't know what to tell you about that. Along with the fact that there's an underground bear society of Palantir that are stuck in covered calls. Garcia posted this today about all the people that are seeing Palantir price action, even though they have their deep in the money covered calls.
Oh, that's terrible.
You seem kind of psyched.
No, I'm bummed. But I wasn't bummed. I was stoked. Oh.
So there's a lot of people that are stuck in covered calls. Dude, my dad has covered calls at 120. I think we sold covered calls. I told you guys that we sold covered calls for him at 40. We rolled it to 60, rolled it to 80. Then we rolled it to freaking 120. And then every day I had to come home when Palantir was at 125. And he was like, I told you we should have never sold covered calls. And like, this is my dad who barely understands what a covered call is, but he knows that he knows enough to say that if the stock goes above 120, then his shares are gone. And every day I had to hear it from him. And it's like, all right, now we're going back to normal. Like it's not at 125 anymore with his shares being in jeopardy of being called away. Also, it's for January 2027. So, I mean, realistically, in 2 years, do I think his shares get called away? Probably. I don't know if we're going to be below 120 by January 2027, but we might be. I guess we're going to find out over the coming years how this ends up playing out. But again, those are my thoughts. I'm just not stressed about it, dude. Like, I've owned Palantir for a long time. I plan to own more Palantir. I plan to go with the ups and downs. I mean, I think we also have to be humble enough to realize what Tesla investors have gone through. They've gone through 20x in like 5 months and then down 70%. I've been saying this for a while. Palantir investors have not felt the pain of the stock market ever since 2022. We've just been up and up and up and up and up since late 2023. HIM's right here down 17%, Palantir 89.39 after hours. And we haven't had one of those moments where like we get smacked in the face. This is the first one, but to me, this isn't really a smack in the face because 125 probably was too aggressive in the first place. A real smack in the face would be going back to 60. That would be like, oh crap, Tesla went from 400 to 100. I don't know if we get there. I don't know. If we do, that's where I would be very excited to buy more shares, but we got to see if we end up getting to those levels. But I also think we don't have to get there because the narrative on Palantir is pretty substantial. This is a nice 30% dip. You're going to have people that get excited to get exposure to the name, especially big money. And you might have people that just buy here and this ends up becoming the base. But I guess we will find out over the coming weeks. Yes, Anthropic is raising $3.5 billion at a $61.5 billion valuation. Saw that news. That is that's bullish for them, bullish for AI, bullish for the broader funding sector. The question is, is Anthropic going to get an ROI off their chatbot? Because that's all it is. Claude is a chatbot. Now, people do say Claude is way better than some of the other chatbots they've used, but Amazon and Google both own a decent chunk of Anthropic currently right now. Amid, how's your sister doing? She, honestly, my sister's sick. She's not like fever sick, but I can tell she's sick. And like, I don't think she even cares about her portfolio. I probably gave her whatever I had. So I don't think she gives a shit about her portfolio right now, but still, dude, I mean, like her portfolio year to date is still up 30%. So it's like, yeah, instead of being up 55%, she's up 30%. It's like, it's just one of those things where it's like, it's been a good year regardless. And it could turn into a nasty year soon, but I don't think anyone can be super, super upset about what's happening right now. Mickey says, I think 60s for Palantir is very possible. Meta went from 400 to 89. That's true. There was a different macro environment at that time, but yes, I do agree, right? Any of these price action levels are possible. Look, if Palantir was at 60, 70, I would not be saying 30, 40 is possible because I think that really undercuts Palantir's growth and it's below its fair intrinsic value. But even at 90, we're at elevated levels, right? And so I could see 60, 70 happening. It's just, but that's not a function of being bearish Palantir. That's a function of the stock went up really quickly. And when things go up really quickly, sometimes gravity takes place and they go down really quickly as well. And does that mean you're stupid for not selling when it goes up really quickly? No, because unless you were trading it and you had no intention to sell, then it was just money in your portfolio that made you feel good. Maybe you bought an extra burger that day when you saw Palantir go to 125, but it's not like you legitimately were missing an opportunity to take profits if mentally you were never taking profits. I mean, this is the same thing we talked about SMCI the other week. The reason I don't care that much that I could have made 7,000 on SMCI instead of 3,000 is because I never had a thesis on SMCI. I don't care about SMCI. It was a gamble. It was a trade. $3,000. You should be pretty grateful if you made that off of a gamble. And there's nothing to have resentment for. But I would have a lot of resentment if I sold my Palantir shares, knowing I think this thing can become $1 trillion company. And I have, in my case, a $25 cost basis, and I sold it at 120 on a short-term momentum boost to then buy it back at 75. Like, what's the value there? Other than me feeling good for a day that I got the local top. There's just, I don't know how to make sense of that. Which same thing for Robinhood. Do I feel bad for not selling at 65? Of course not. Like, no, because I think it'll get back there one day, even if it takes some time. And I don't need that money at 65. Like, where else am I going to put the money? That's another question. If you sell your Palantir, if you had sold it at 125, where else would you have allocated it? And if you don't have an answer to that question, like a good answer, then I don't know where else you would have had to end up putting it. Someone said the HIMSS call started. I don't think it started yet. They start at 5 p.m. Let me pull it up. On their website, it says 5 p.m. Let me pull this up. I'm pretty sure it's at 5 p.m. Yeah, it didn't start yet. We got 15 minutes. 15 minutes until HIMSS starts. 15 minutes. So we're going to see. 15 minutes, and then we'll see what happens with HIMSS. Dude, that's the smart thing to do. That's not the smart thing to do, in my opinion, if you can't get back to your average. Right? Like selling it at 125, if you have a $20 average, and then buying it at 70 or 90 makes no sense to me. What makes sense is if you bought it at 70 and then it jumps to 115 and you sell it at 115 and buy it back at 65 or 75, then that makes sense. But for the people here, and I know a lot of you guys in the chat have like $10 averages, that's not, I don't think, like, unless you need the money, which by all means, if you need to take the profits, take the profits. But I don't think Palantir is going back to $10, so it's not like it's going to be that easy. You just gave yourself a giant tax bill. That's another, yes, 1,000. Dude, I have enough short-term capital gains tax to deal with selling options as of last year, which is another reason I haven't sold my Palantir or my hood. Like, that's, at this point, I'm figuring out what do I sell to be able to get the money to pay for the other shit I sold when it comes to taxes. That's where life is going to at this point. So I don't think it's that fun to keep getting these tax limits. Okay, let's go back to that take we were getting from Courtney on disinflation, then we'll keep going from there. We got the HIMSS call in about 13 minutes, and we'll see what they say.
For investors, one is that policy paralysis doesn't mean investors have to be paralyzed. I think there's a lot of changes we could make here. And the second is that the through line, despite all the uncertainty around tariffs, trade, and other policy priorities, is that the world is changing, that we're moving into a more polarized, very, and what I think is a very capital-intensive investment backdrop.
How do you see it?
So, it's really interesting because there's a lot of angst about all the policies coming out of Washington, and yet we're sitting less than 2% from the all-time high. And it's kind of relentlessly flat market, 2 steps forward, 1.5 back. This feels like the year because you really have two countervailing forces. You have the promise of growth and deregulation, countering the threat of inflation and higher yields. And so that's the conversation, essentially, since we started the year and since we started the new administration. How does this all play into growth and inflation? So the market has not made up its mind yet. I'll say this, I think that it's really important for tech to hold leadership here because the earnings and the margins come from tech. So if that sector starts to falter, if the Magnificent Seven, the top 10 of the S&P start to falter, you'll get weakness in the rest of the index.
You will, because you really didn't get that. I mean, obviously, you're going to get if the biggest market cap stocks, have a problem. Obviously, the S&P may have a bit of an issue, but to start the year, tech wasn't one of the best performing areas at all. It did spread to the rest of the market. You had a nice broadening out.
You had a nice broadening out. It just has to stay in line, right? You can't have a situation where all of a sudden you get too much CapEx and earnings revisions go lower because the margin growth, and we're looking at 13 0.7% forward margins for the S&P, the highest ever, which is part of the reason why the multiple is being supported here, even with yields at about 4.5%, because the margin's so strong. That's all coming from tech and communication services. So that has to maintain itself. So look, we think this is actually a really interesting investing environment because you have more dispersion. You have companies that are really growing. There are great opportunities. On the index level, we think this is a year where it's positive, but unsatisfying, right? At this point last year, we had something like 12 or 13 new highs. That has not happened this year. So it's just more of a conversation. Better for markets ultimately to digest, to move forward. We don't see a recession coming. Growth is good enough. We think a disinflation continues later in the year. And let's talk about QT, right? QT is going to end. That's massively positive for markets and liquidity.
Okay, so look, I agree with some of those core arguments when it comes to opening up liquidity. And I agree with their arguments about tech earnings. But again, Palantir right here, 89.64, down another 1% after hours. We've seen Riot up 3%. We've seen Bitcoin below 94. We've seen tech have decent earnings, but not phenomenal earnings. Google, Microsoft, and Amazon all missed on their cloud estimates for 2025. Slight misses, but misses nonetheless. NVIDIA is going to have to pick up the slack. And the one thing Google, Amazon, and Microsoft did not miss on is CapEx spend, which is not slowing down, which is good. But eventually that CapEx needs to give an ROI. And at least for the next 18 months, I would imagine that CapEx will still be bullish for NVIDIA. So, I mean, we're going to have to find out. We're going to really have to find out on Wednesday what happens to NVIDIA. Here's what Dan Ives had to say about Microsoft and that report that they are decreasing some of their CapEx spend this morning.
To CNBC from Microsoft is a big deal. It's leading CNBC.com right now because it's basically saying what you've said, which is TD Cowen kind of scaring everybody over the weekend. You know, the note was getting passed around, and yet Microsoft felt compelled enough to respond to it and say, whoa, 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 we may move spending around, but we're still going to spend $80 billion.
Yeah, I mean, like, I thought it was way off base in terms of just the merits of it, because Microsoft does this all the time. And they foreshadowed it even on the conference call, talking about, you know, they're going to be focused more and more on servers and actually less and less when it comes to some of the data center build outs. I think this is something that there's more smoke, no fire. I think that's why they had to come out. This was definitely scaring a lot of investors in a jittery market. I think any sell off here, this is a name that's way oversold, and nothing here in any way makes us nervous.
The broader, I mean, we also hear from NVIDIA after the bell on Wednesday, Dan, so everyone's a little bit on edge to see whether they, I'll use the verb again, are showing any signs of being deep-seeked.
Hey, look, I think that's the issue, is that, you know, the nervousness now out there, but it's 15-1 demand to supply for NVIDIA chips. I think when Jensen comes out on Wednesday, it's going to, not just in terms of the beat that we think, you know, 2 billion beat, but talking about Blackwell demand. You saw the CapEx, $325 billion from big tech CapEx. That's just going to be more and more, I think, the tailwind for NVIDIA and for this build out. Everyone keeps looking for cracks in the armor, but I could tell you, we're seeing more things accelerated in the last 3 months than anything else, and that's why we continue to be very bullish on names, despite many of the bears. Right? I mean, bears are always going to get everyone nervous, and I think Wednesday that those are put to rest.
All right, we'll see. We got a couple of.
Wednesday is going to be a big one. Wednesday is going to be a big one. I see a lot of the comments right here in the chat. A lot of people saying it would have been smart to just sell at 125, buy back lower. Look, sure, in hindsight, it would be smart, but I think a lot of people are falling into the trap of what volatility creates, which is this lack of mental peace, which is very toxic, about what life would have been like if you timed it correctly. Like, yeah, of course, in a perfect world, if you sell here and buy here, things feel better, but that's just not the markets. That's just not, a lot of people have jobs and families, and like, no one knows exactly when this, like, you just don't know. So I don't think anyone should genuinely be upset if they didn't sell Palantir at 125 or Robinhood at 65. And the only way to not be upset is you, A, know what you own, B, you have a long-term mentality here. Trust me, there's a lot of short-term mentality I have on tons of different tickers with selling options and puts and calls and all that stuff. But with those two stocks, minimum in my portfolio, and Grab is becoming the third one where I'm genuinely becoming long, it's a 10-year horizon. And we're only a couple years into that horizon. So, I mean, like, it can get really toxic, dude. You can lose sleep overnight of thinking you could have sold at 120 or sold at 65. And I don't know, dude. I feel like 5 years being into the market, that's not the right way to psychologically deal with it. Because it's just like, you're never going to be perfect at this stuff. And if you think you are, I don't know. You could have that type of ego, but it's hard to imagine you are able to be perfect at that. Speaking of Palantir, we got 5 minutes left until Him's call. Here's Karp, 3 minutes today. He was speaking at the Economic Club of New York. We'll take a listen to this, and then we will get into that Him's call today.
I had this whole riff about the value of dyslexia. And now I was in the closet about my dyslexia until about 7 or 8 years ago. And then I had this normal theory of dyslexia, which is a little bit Nietzschean, like because you're stronger in one area, because you're weaker in another, you get hyper strong. And then there is a discipline to being dyslexic, like you're very aware of what you should never do. And so you kind of very quickly get into the things that where you might have an advantage. And I've seen people have, what I've seen over and over and over again is, I have this theory, and I tell people this over and over, another obnoxious thing that pisses people off. I'm like, everyone's dyslexic, everyone talented I've ever met, except for this one person, Bob McGrew, is dyslexic. You just don't know it. I do. And that basically means you think you're not bad at things, but it's only because you haven't met someone who's really good at it. You really probably, if you're lucky, are really good at one or two things, and everything else you're good enough because you haven't met the real standard. And so, and then I now see it pretty differently because of the large language model. So what large language models, they're a science experiment, but managed in software they create, you really can do things that experts would do. So you can change the CapEx of the business very, very quickly. But on the negative side, they commoditize standard things that are standard. And on the positive side, they make things that are unique, odd, irreplaceable, enormously valuable. So like being the one nation in the West that can somehow just stand up and say, we're proud to be American, it's crazy important, because like that doesn't translate well into German, and or having a unique way to evaluate an asset, or a unique perspective as a painter or writer, and then what I've seen is like of course that really plays well into, like the thing that, like when you're essentially a definition of dyslexia, it covers a lot of stuff, would be having an attenuated relationship to all taxonomies. So when I wrote a PhD in German. I did all the writing at Palantir till recently. But when I'm reading and you're reading with a direct one-to-one relationship to the taxonomy. And that has a huge advantage that I've been very jealous of my whole life and would have cut off my right and left arm to be able to do. But the advantage I have is I'm attenuated to the taxonomy, so the taxonomy doesn't become me. And that attenuation is crazy valuable when you're trying to do something that is unique, because I don't have that. So what I've actually kind of mostly learned in the last couple of years is the attenuation to the taxonomy, written taxonomy, that created so much pain in my life and others who have similar afflictions, is actually the thing paying all the bills.
So that was Karp speaking about his book at the ECNY. Here's another quick video. It's like 30 seconds before we get into the Hymns call that I think some people might have missed when he was talking about his purpose in life. This was with Ross Sorkin in New York last week.
Try that. It's really hard to do. And so to organize yourself around doing that, you need a higher purpose. And I also think you often need a lower purpose. Like the higher purpose for me.
What's the lower purpose?
Well, I love the idea of getting a drone and having light fentanyl laced urine spraying on analysts who tried to screw us. So that's my lower purpose. And
Yeah, and others. But the higher purpose for me was to get this nation to be the preeminent power in the world.
Dude, when I heard that last week, I was like, did he just say that, dude? But this is why he's carp. Again, your lower purpose is like the thing you selfishly want. The higher purpose is like the thing you like actually are striving for in terms of your like North Star mission. Higher purpose is keeping the West safe. Lower purpose is screwing over the analyst. And he had a very exquisite way of describing how he would screw over the analyst. But that's what Carp said. All right, hymns call. Here we go. We're starting. Or should be starting in just about 15 seconds, and then we're getting into it. Yeah, you could see the regret in Ross's voice as soon as he said that question. That was as soon as he said fentanyl, I was like, what is he saying? And he said urine. I was like, where is he going with this? And then he said the screw over analysts. And I had a couple people who were actually there live, and they were like, as soon as he said that, the whole room was just like, they could not believe he said that. But then again, that's why he's carp. Why is hymns red? Actually, we don't know, Adam. I mean, revenue, EPS. I still don't have a reason why they're red, but I guess we'll find out on this call. Here we go.
Good afternoon, ladies and gentlemen, and thank you for standing by. My name is Kelvin, and I will be your conference operator today. At this time, I would like to welcome everyone to the Hims & Hers fourth quarter 2024 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, simply press pound key or star 2. Thank you. I would now like to turn the call over to Bill Newby, Head of Investor Relations. Please go ahead.
Good afternoon, everyone, and welcome to the Hims & Hers Health fourth quarter and full year 2024 earnings call. Today, after the market closed, we released this quarter's shareholder letter, a copy of which you can find on our website at investors.hims.com. On the call with me today is Andrew Dudum, our co-founder and chief executive officer, and Yemi Okupe, our chief financial officer. Before I hand it over to Andrew, I need to remind you of legal safe harbor and cautionary declarations. Certain statements and projections of future results made in this presentation constitute forward-looking statements that are based on, among other things, our current market, competitors, and regulatory expectations, and are subject to risks and uncertainties that could cause actual results to vary materially. We take no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. Please see our most recently filed 10-K and 10-Q reports for a discussion of risk factors as they relate to forward-looking statements. In today's presentation, we also have certain non-GAAP financial measures. We refer you to the reconciliation tables to the most directly comparable GAAP financial measures contained in today's press release and shareholder letter. You can find this information as well as a link to today's webcast at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I'll turn the call over to Andrew.
Thanks, Bill. What an incredible last few months we have had to finish a breakout year. At Hims & Hers, we believe we are building the next generation healthcare platform. A platform that leverages personalization and technology unlike any traditional healthcare system, delivering access to affordable, on-demand, high-quality, and precision-tailored care to millions of people. The future model of health and wellness that centers around the consumer and the consumer alone. This vision requires extraordinary levels of innovation across technology, infrastructure, and services. And I'm absolutely in awe at the team's execution across so many avenues to accelerate towards this vision. From our recent acquisition of our new whole body lab testing facilities, which will bring Hims & Hers customers a deeper understanding of their comprehensive health and treatment personalization, to our acquisition of our new Menlo Park peptide facility, which will establish domestic durability of our supply chain for one of the most innovative and exciting areas in medicine, to our Super Bowl ad, which sparked an incredible breadth of discussion around our existing healthcare system, and lastly, to our growing bench of impressive talent, making our team an even stronger competitive advantage. We are attracting leaders across disciplines from technology to women's health, who recognize the extraordinary opportunity to reshape American healthcare. At the end of 2024, over 2 million subscribers entrusted Hims & Hers to aid them in their journey to better health, with thousands more joining daily. This vision of an on-demand, personalized healthcare platform is resonating with consumers across America. Over the past 25 years, Uber and Airbnb reshaped transportation and hospitality. Amazon and Shopify revolutionized e-commerce and logistics. Netflix and Spotify redefined media consumption, and PayPal and Square modernized digital payments. Yet we haven't seen a similarly transformative shift in one of life's most critical areas, healthcare. Recently, however, I've felt the same sense of disruption and possibility with what we are building at Hims & Hers. These disruptors introduced a concept of on-demand in a manner I had never experienced, hyper-personalized and catered to my needs, transparent in their pricing, and ultimately reliable and empowering. These are words never uttered when describing healthcare in America. At Hims & Hers, our ambition is simple. We plan to change that. We have been breaking the status quo since our founding in 2017. And through our vision of what healthcare can and should look like, we've achieved a breadth of accomplishments that few thought possible. We've engineered a vertically integrated proprietary technology stack that powers over 10,000 patient visits per day, and we believe is home to one of the most powerful, completely closed-loop data sets in healthcare. We've built nearly 500,000 square feet of cutting-edge pharmacies and fulfillment centers that deliver personalized treatments across dozens of conditions and multiple innovative form factors, helping support high-quality clinical outcomes through optimized dosing, side effect mitigation, and vitamin supplementation. And we've broadened our brand from one that focused on niche men's categories like ED to one that millions of Americans entrust for their health and wellness needs across an ever-broadening set of specialties, from men's and women's health, dermatology, mental health, adjunctive cardiovascular support, and most recently, metabolic health. We are in the earliest of days in transforming how Americans improve their health and wellness. And when we think about the future, our investment areas fit into simple yet powerful buckets. First, by leveraging advancements in technology, specifically AI, we can expand the scope, quality, and capabilities of diagnostic tools available on Hims & Hers platform. Second, as our technology gets more sophisticated and we bring more data-rich integrations onto our ecosystem, like lab testing and wearable devices, we can expand the breadth of personalized treatments, including preventative capabilities, accessible on our platform. Third, by focusing on the long-term consumer journey, we can expand the value of the Hims & Hers relationship with improved offerings that drive increased and higher engagement follow-up care. And fourth, as our verticalized capabilities and platform get stronger, we see a path to export our capabilities beyond the walls of Hims & Hers, helping legacy healthcare enterprises transform to be capable of delivering the same quality, efficiency, and personalization for their patients. Our recent investments are in lockstep with this future vision, helping to position us to execute across each of these critical areas. Data is a key differentiator on our platform, as we are one of, if not the only, large-scale, vertically integrated health systems spanning the end-to-end patient journey. At the end of 2024, we began negotiations to acquire a provider of at-home whole-body lab testing, which we were excited to close last week. With this additional capability, we will be able to test for a wide range of critical biomarkers across heart, hormone, liver, thyroid, and prostate, helping to proactively identify individual risks for disease. We believe this type of comprehensive health testing should be available to everyone, given the possible life-altering learnings. Given this, we look forward to expanding the value each Hims & Hers subscriber receives this year with comprehensive testing at extraordinarily affordable costs to our customers. Whole body testing gives providers even more insights into their patient's health, enabling a more holistic, individualized treatment plan, inclusive of personalized medications, supplements, workout routines, and nutrition. Whole body lab testing will also enable us to expand into specialties such as menopausal support, low testosterone, and more. With this acquisition, we are elevating the personalization of care individuals will be able to access on our platform. Expanding data sets enable us to identify elements of a member's health, such as vitamin deficiencies and unoptimized health indicators, leading to better personalization of treatment through expanded offerings that take these diagnostic components into account. As we deepen the personalized care we can offer, investments across our nearly 500,000 square foot footprint across Ohio, Arizona, and California will set the foundation to potentially move from offering hundreds of personalized treatment variations to eventually offering thousands of treatments over the coming years. At the end of 2024, we also signed an agreement to acquire a California peptide facility. As we work to address chronic conditions and areas of need among Americans, this facility will provide the ability to explore innovative advances in preventative health, metabolic optimization, cognitive performance, recovery science, and biological resistances. I'm thrilled with the potential range of treatments in peptide science, and we are committed to being at the forefront. We believe that this acquisition will provide us with opportunities to more closely participate in this innovation and also bolster our domestic supply chain for treatments that could be critical to America's future. As the breadth of treatments and services expand on our platform over the course of the next decade, our belief is that advancements in technology can facilitate materially better outcomes and unlock a level of access unlike anything available today. We believe that AI and scaled de-identified data will help power extremely important network effects for our platform, enabling each new customer's experience to drive improvement to the care and experience of the next. We also believe that leveraging AI and our current clinical expertise and intelligence can elevate the types of follow-up care available for millions of individuals. We see great healthcare as a combination of appropriate treatments, high-frequency provider support, and access to services that help individuals achieve healthier habits. In 2024, we launched tools such as BMI calculators and trackers to help members monitor water intake, nutrition, movement, and sleep, all focused on helping our subscribers build a healthier lifestyle. In this next generation of healthcare, we see a world where AI can substantially elevate the subscriber experience by providing resources with greater sophistication, such as AI coaches, therapists, nutritionalists, and trainers, available for 24/7 on-demand support to help our customers make meaningful lifestyle changes in pursuit of their health and wellness goals. Trusted and empathetic AI-powered care coordinators to help customers navigate their healthcare journey, and greater transparency and visibility into the reasoning that drives each treatment and service recommendation on our platform in a manner not constrained by the availability of provider time on the platform. While our ambitions and technology advancement are far-reaching, we have been energized by the market receptivity to this vision. Leading engineering executives, world-class AI researchers, and operators responsible for building and massively scaling some of the most notable businesses in the world have been part of our year-long search for our Chief Technology Officer. We have been humbled by the shared excitement for our vision and the widespread passion to transform the American healthcare system. We are thrilled to share that we have signed an offer for our new Chief Technology Officer, and we expect to share more about our latest executive team member in the coming weeks. Our focus in 2025 will be on continuing to further progress our platform capabilities, deepening our competitive moats, and expanding our value to customers. We will do this through continued execution across 5 key priorities. First, through the integration of whole body lab testing, we will provide access to richer insights for consumers into their health. I cannot stress the transformative unlocks we believe will come from empowering customers with their data. Diagnostic capabilities will serve consumers by supporting our expansion into additional specialties such as menopause and low testosterone, and pave the way for a greater breadth of personalized offerings, inclusive of medications, supplements, and lifestyle changes. Second, we will continue to invest in our pharmacies and infrastructure. These investments will come in the form of expanding our capacity for sterile compounding, as well as further automation of facilities to unlock the capacity to offer access to thousands of more highly personalized treatments in the future. Third, we will broaden and deepen the capabilities of our technology stack to facilitate even better recommendations from providers to each individual patient, as well as lay the foundation for AI-centric tools and coaches capable of even further improving the quality of follow-up care received on the platform. And fourth, we expect to conduct R&D for the launch of future specialties and subspecialties that leverage our capabilities and reach an even broader set of customers. And finally, we will continue to position ourselves to be a leader in addressing the chronic obesity epidemic across America. There may not be a more impactful use case for precision medicine than America's obesity epidemic, which impacts 100 million individuals across the country and results in 500,000 preventable deaths per annum. North of 200,000 individuals joining the Hims & Hers platform in the span of a year to meet their weight loss needs is evidence of the benefits that consumers see in our approach to personalized medicine. As we shared last year, we believe our approach can enable material improvements in clinical adherence and compelling customer satisfaction, and we're seeing gains in the realization of this goal. In order to truly address the epidemic, patients need comprehensive care that extends beyond medicine to making lifestyle changes from nutrition to exercise to mental health, and we are dedicated to this approach. Precision medicine is about using the right tools for the right patient at the right time. We believe this approach to personalized medicine will ultimately drive better clinical outcomes by enabling providers to personalize the dose, form factor, and other clinical delivery aspects of existing clinically validated medications. In our work, we are committed to integrity and transparency. We are not bypassing the regulatory process, nor are we creating new drugs. The regulatory framework for compounding and the FDA have long recognized the need for compounders to be able to compound medication to meet patient needs that utilize ingredients of, but that are not essential copies of existing drugs. We focus on providing access to better care in this framework through personalization, period. We believe that Americans deserve transparency about the system and their options, and we will continue to passionately push back against any attempts to confuse or scare consumers about whether compounding can be done legally and safely. We won't claim improved efficacy until the data substantiates it. We will continue to show our quality and safety process across every step of the customer journey. We take a logical approach that lets patients and providers draw their own conclusions because we believe that patients, not pharmaceutical profits, should drive our healthcare system. We are aware that change can be scary for industry incumbents. Big Pharma's reaction to our call to fix today's stuck and sick healthcare system has been to band together and question the need for affordable compounded solutions and incite fear in regular Americans through broad stroke statements about the safety of all compounded medications. As always, we will continue to monitor and comply with regulatory requirements related to the GLP-1 shortages. And we will continue to primarily focus within our weight loss category on bringing care to individuals that stand to benefit from our oral-based offerings, liraglutide later this year, and clinically necessary personalized dosages of semaglutide. The investments we've made on our platform will help ensure that we can effectively help the millions of potential Americans that can benefit from our holistic approach to weight loss treatment. Additionally, these investments position us to be a leader in providing access to high-quality treatment to millions of more Americans as more brand-name GLP-1 medications go generic in the coming years. As a founder-led company, we have one rare advantage that most companies do not: extreme patience. While most might get lost in the noise of today's realities, the future is where we are focused. A future where high-quality, personalized care is available to everyone on demand at affordable prices from the comfort of their home. This vision is coming to reality and it's shaking the incumbent system. We believe that in the coming years, that future will be obvious and available to all. We look forward to updating you on our progress across these priorities over the course of 2025. With that, I will pass it over to Yemi to talk through our financial performance and outlook for 2025.
Thanks, Andrew. I will start by providing an overview of our fourth quarter financial performance before diving further into our outlook for 2025.
Okay, I know you guys are bored. This is going to keep getting boring. These guys are not like Grab where they said 2 words and they got to Q&A. They're going to read off a PowerPoint for the next 10 minutes, and then hopefully we get to Q&A.
$481 million and $1.5 billion for the fourth quarter and 2024 fiscal year, respectively. This represents year-over-year revenue growth of 95% for the fourth quarter and 69% for 2024. Helping drive our success is our ability to attract and retain subscribers across our tenured specialties, and secondarily, an ability to scale new offerings such as our weight loss treatments. Revenue outside of our GLP-1 offering increased 43% year-over-year to $1.2 billion in 2024, reflecting an ability to achieve the floor of our revenue expectations for 2025 a year early. Expansion of personalized treatments on our platform is continuing to result in strong subscriber growth. Total subscribers on the platform increased 45% to over 2.2 million in the fourth quarter, with over 55% of those subscribers subscribing to at least one personalized solution. Unique form factors, multi-condition treatments, and personalized dosages are unlocking growth in some of our most tenured specialties and serving as an accelerant for some of our newer specialties. For example, in the fourth quarter, subscribers in men's and women's dermatology grew over 55% and 100% year-over-year, respectively. Our belief is that lab diagnostics will unlock a greater breadth of personalized treatments, which will further expand the runway for growth across our existing specialties. Almost 100 million Americans are currently struggling with weight loss. We launched an oral-based weight loss offering in the fourth quarter of 2023, which saw great success as it scaled to a revenue run rate of over 100 million in just over 7 months. Our GLP-1 offering, which launched in the second quarter of 2024, has experienced similar success, delivering north of $225 million of incremental revenue in 2024. We believe success behind this offering is a result of the brand equity we have built over the years, as well as our high-touch model that includes frequent provider engagement, tools to build healthier lifestyle habits, and access to personalized treatments. Line of sight to future operational efficiencies gave us comfort to make our injectable offering even more affordable. We reduced the price for our 12-month SKU from $199 a month to $165 per month in December. The majority of weight loss subscribers are now opting for treatment plans of 6 months or more, which we believe will translate into strong retention and improved adherence for our weight loss subscribers. Similar to previous strategic pricing actions, we are confident that these changes will be long-term accretive to the platform and provide a path to unlock economies of scale in the future. Additionally, we believe that the ability of providers on our platform to personalize successful titration plans and steady-state dosages strengthens with each subscriber that has success on our platform, making our ability to rapidly scale a distinct competitive advantage. While the addition of subscribers remains the primary component of our growth, monthly online average revenue per subscriber is becoming a more meaningful contributor as well. Monthly online average revenue per subscriber increased 38% year-over-year to $73 in the fourth quarter. Scaling of GLP-1s, as well as subscribers shifting to more premium personalized offerings, are the primary growth drivers. Significant investment was made in the fourth quarter in areas that we believe set the foundation to drive future economies of scale. Despite this investment, adjusted EBITDA margins remained strong at over 11%, as adjusted EBITDA increased over 160% year-over-year to $54 million in the fourth quarter. For the fiscal year of 2024, our platform delivered $177 million of adjusted EBITDA, as adjusted EBITDA margins more than doubled year-over-year to 12%. Gross margins declined approximately 2 points quarter-over-quarter, in line with expectations highlighted earlier this year. The scaling of our GLP-1 offering, as well as strategic pricing actions enacted within our GLP-1 offering in the fourth quarter, are the primary drivers of this change. We expect margins to start to recover in the second quarter as we reach milestones for pre-adjusted volume-driven discounts across our operation, with further opportunity as we expand sterile fulfillment capabilities within our affiliated facilities later this year. In the fourth quarter, we leaned into specialty-specific marketing on national stages at scale for the first time. Marketing as a percentage of revenue in the fourth quarter was 46%, representing a 5-point improvement from the prior year and a 1-point degradation from the prior quarter. higher retention as a result of an increasing shift toward personalization, as well as acquisition of customers organically and through lower cost channels, continues to provide confidence in our ability to achieve between 1 to 3 points of leverage on our marketing spend per annum. For the fiscal year of 2024, we exceeded this goal, driving marketing as a percentage of revenue down to 46%, reflecting over 5 points of leverage relative to the prior year. Strict management of our operating costs continues to allow us to gain leverage on our G&A as well as operations and support costs. In the fourth quarter, G&A and operations and support costs as a percentage of revenue improved 3 points and 1 point year over year, respectively. Net income was $26 million in the fourth quarter and $126 million for the full year, marking our first full year of GAAP profitability. The full year figure included a tax benefit primarily related to the release of a domestic tax valuation allowance, partially offset by current period tax expense. Cash flow generation remained strong as we delivered nearly $60 million of free cash flow in the fourth quarter, bringing the total free cash flow generated in 2024 to nearly $200 million. Cash and short-term investments on our balance sheet were over $300 million at the end of the year. 2024 was an exceptional year for Hims & Hers, but as Andrew mentioned, we believe that we are just scratching the surface of what our platform can deliver in the years to come. Before going into our outlook for the year, I will provide insight into how we expect to allocate capital in 2025. We expect more capital investment across a few key areas in 2025 to continue building toward our long-term vision for the company. These areas include, first, an investment in expansion of sterile capabilities and capacity within our 503A and 503B facilities. These investments will ultimately enable us to more economically provide offerings such as liraglutide on our platform, which we believe will further enhance the durability of our weight loss offering. Additionally, sterile capabilities provide a critical component necessary to expand into other areas such as menopausal support and low testosterone in the future. Second, we are investing to expand capacity for a greater breadth of personalized offerings through investment in equipment with increased automation capabilities, as well as the launch of a larger facility in Arizona later this year. Our ambition is to have the capacity to leverage additional de-identified data points from interactions on our platform and lab diagnostics to increase the depth of personalized treatments available to subscribers, whether that be through additional form factors or multi-condition treatments. Third, we expect to integrate lab diagnostic capabilities into our platform in a way that allows us to offer it to subscribers at a low cost or in some instances for free. We believe lab diagnostics can be an additional value-add service for subscribers that serve as a foundation for more personalized treatments, as well as enable expansion into other specialties in the future. Lastly, we will continue our focus on strengthening the long-term durability of our domestic supply.
Okay, I think Q&A is coming up in like a minute, and we should finally get some questions on this call.
Additional long-term anchor for our focus on U.S.-based operations, as well as an opportunity to explore innovations in medicine made possible through peptide development in the coming years. Similar to prior years, we will be thoughtful in our allocation of capital across these initiatives and expect to continue to deliver strong free cash flow in the future. With that backdrop, I will provide an additional perspective into our outlook for 2025. In the first quarter, we are anticipating revenue in the range of $520 to $540 million, representing a year-over-year increase of 87 to 94%. We expect adjusted EBITDA to be between $55 to $65 million, representing an adjusted EBITDA margin of 11% at the midpoint of both ranges. For the full year, we are anticipating revenue of between $2.3 to $2.4 billion, representing a year-over-year increase of 56 to 63%. It is our expectation that 2025 adjusted EBITDA will be between $270 and $320 million. These adjusted EBITDA and revenue ranges imply an adjusted EBITDA margin of 13% at the midpoint of both ranges. Embedded within our outlook are the following assumptions. First, given what we know today, we anticipate 2025 revenue contributions from our weight loss specialty of at least $725 million. This figure excludes contributions from commercially available dosages of semaglutide, which will not be offered on the platform after the first quarter. There may be the potential to offer commercially available dosages of compounded semaglutide throughout the year. However, we see our steady-state weight loss offering being primarily composed of our evolving oral-based solutions, as well as liraglutide later this year. Personalized semaglutide dosages will supplement these core offerings for the subset of consumers for whom it is a clinical necessity. Supply chain consistency across 2025, inclusive of affiliated pharmacy and third-party fulfillment and distribution dynamics, is a key assumption in our guidance. Second, our expectation is that the first quarter will remain an investment quarter as a result of the strategic pricing actions made in December and investment in our 1-minute Super Bowl campaign. We expect some pressure on gross and adjusted EBITDA margins in the first quarter, but anticipate improvement through 2025 beginning in the second quarter. Line of sight exists to realize volume-driven discounts across our ecosystem later in the second quarter, and further benefit is expected as greater sterile fulfillment capacity from our facilities comes online throughout the year. Third, we remain committed to ensuring that our voice is heard during the most culturally relevant moments across America and expect to continue to have a significant voice for the most pertinent issues across healthcare relevant to our platform. Our expectation is that we will maintain a 1-year payback period on our investments while executing these activities. Additionally, we have high confidence in our ability to continue driving between 1 to 3 points of marketing leverage per annum as a result of, first, an increasing amount of our spend becoming semi-fixed in nature. Second, an ability to draw a broader audience and retain them as a result of high-quality personalized solutions available on the platform. Third, an increasing amount of customers acquired organically and through lower-cost channels as a result of historical investments in our brand, as well as entry into specialties more conducive to word-of-mouth referrals. And lastly, the continued maturation of additional subscriber cohorts on our platform. Marketing leverage is an instrumental component of our path toward margins of at least 20% by 2030, which we believe we are on track to achieve. Lastly, we expect long-term revenue retention to remain above 85% as subscribers engage with personalized products across more specialties. Ongoing subscriber adoption of personalized solutions present both acquisition and retention benefits across each of our specialties. Recent trends give us confidence that each of our specialties will deliver more than $100 million of revenue in 2025. Capabilities that were built organically, as well as recently acquired, provide a path toward an exciting future for Hims & Hers in 2025 and beyond. Investments that we make in 2025 will position us to transform the way millions of individuals optimize their health through the examples that Andrew highlighted for our long-term vision. Our ability to drive these strong results would not be possible without the dedication of over 1,000 employees across Hims & Hers. I'd like to thank them, as well as all of our customers and partners that support us in our mission of helping the world feel great through the power of better health. We appreciate the support of our subscribers and shareholders and look forward to keeping you updated on our progress. With that, I will now turn the call back over to Bill to kick off Q&A with 2 questions from our retail community.
All right, here we go.
Thanks, Yemi. And thank you to all the investors that sent us questions over the weekend. It's clear that that part of the investor base continues to expand, and we're excited to more regularly engage with this part of the group. To get things started, this was a top question from the Hims House, a retail community dedicated to Hims that is growing in popularity. The question is, what are the top 3 to 4 strategies that will allow Hims to reach tens of millions of subscribers on its platform, and what is the rough time frame for reaching this goal?
Thanks, Bill, and thanks, Hims House. It's been fun to watch you guys grow as a community. I think 10 million subs on the platform to me feels, really quite in reach, and I think, frankly, pretty straightforward from a growth standpoint. If you look at historical growth over the last 5 to 6 years, my optimistic hope and personally ambition would be to try to achieve this in the next 5 to 6 years. I think the top strategies are the ones, frankly, that the business is operating against today, which is, first to expand the categories and the specialties on the platform. So you'll see deeper segmentation, more indications. I think the lab testing acquisition this past week is something that will massively accelerate that breadth of conditions. The second, I think, is a broad expansion of the personalized treatments on the platform. And as we talked about in the prepared remarks, my ambition is really to go from a place where we have 300 personalized treatments, which exist today on the platform, to a place in the not so distant future where you've got thousands of treatment variations. And this is, hyper-personalization across dosing, side effect mitigation, multi-condition support, vitamin supplementation, and ultimately form factor, which we know has a massive adherence contribution. So I think as you expand those personalized treatments, you're unlocking different groups of people who feel like there's something on the platform that better represents their needs. And then I think lastly, there's going to be a real accelerated investment in technology that's going to be necessary to empower this type of scale. Right now, as I shared, we're powering north of 10,000 visits on the platform per day. You need to be able to power 20 and 30 and 40,000 visits on the platform per day. And so there's a real necessary investment across decision-making tools for providers to help them be more efficient and more precise, more long-term capabilities with AI that allow the customer to have a higher touch experience after they've been treated, and more handheld throughout the long term of their journey. And so all of that, I think, is kind of the big areas. We're very excited from a technology standpoint to have our CTO joining and be able to share more about that offer in the next couple of weeks.
Thanks, Andrew. We kind of on that last point, we received a lot of questions on AI and its applications on the platform. This one comes from Stephen W., who asks, how is HIMSS leveraging AI and data analytics to enhance the telehealth offerings today, as well as the personalized treatments and drive increased efficiency in the healthcare ecosystem? Are there plans for AI-driven diagnostics or automation to improve patient outcomes?
Yeah, thanks, Stephen, for the question. Absolutely. Across both of those, both diagnostics and long-term patient outcome management, I think increasingly AI is at the core of everything that we're discussing as a management team. What we are building, I believe, is possibly the most powerful data set in healthcare, because it's really the only at scale, fully verticalized end-to-end system. So we are overseeing and managing not only the initial patient intake, but the diagnostic component, the treatment component, the long-term relationship to chronic care, the adjustment to treatment, and ultimately whether or not the outcome is delivered. And so that data set delivers a really powerful flywheel. I think what you'll see from a diagnostic standpoint is real investments in MedMatch, the ability to more precisely identify diagnosis for patients, but also personalized treatments for patients. I think you'll obviously see lab work be built into MedMatch in a way that expands the range of diagnostic capabilities and treatment capabilities. And then lastly, I think on that follow-up care side and on the patient improvement side, I think you'll see us meaningfully change the status quo for what it looks like to be a Hims & Hers customer long-term. One of the things that I think about a lot as an entrepreneur is what are things that the ultra rich have access to? And then how can we broaden that and give that to everybody? So things that people have are on-demand therapists, right? They've got nutritionalists, they have fitness coaches, they have meditation coaches. These are people that are in your life helping you to live healthier lifestyles. I think we are capable of building incredible AI versions of all of those coaches, which really change the paradigm for how easy it is to change the lifestyle dynamics in your house, and ultimately expand that to tens of millions of more people down the line. Now, at the end of all of this, I think what is maybe even the most exciting from an AI standpoint is as we build these fairly proprietary models internally and validate them internally across our data set, I think there's one day the opportunity to open this up and in partnership actually help power the existing legacy healthcare systems, and help transform those legacy healthcare systems to actually be able to deliver the Hims & Hers quality and experience and personalization at scale. And I think that ambition is really exciting for us because it means that we're not only changing healthcare for the customers that are coming to Hims & Hers, but we're also one day possibly helping power the rest of the system in delivering great healthcare to others.
Great. Thanks, Andrew. Thanks again to all who sent in questions. We look forward to hearing from you again next quarter. And with that, I'll pass it back to the operator and we can begin the regular way Q&A.
Ladies and gentlemen, we will now begin the question and answer session. As we move into the Q&A session, we ask that you please limit your input to one question and one follow-up. At this time, I would like to remind everyone to ask a question, press the star button followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press pound key or star 2. One moment, please, for your first question. Your first question comes from the line of Maria Ripps of Canaccord. Please go ahead.
Great. Congrats on strong results, and thanks so much for taking my questions. First, I just wanted to ask about GLP-1 personalization. Can you maybe just help us understand some of the mechanics around assessing new patients when deciding if they're good candidates for personalized semaglutide dosing? I guess, especially for some of the patients that are new to GLP-1s and maybe haven't had experience with side effects. I guess, what's your approach to understanding if someone needs a personalized solution versus some patients sort of being attracted to more affordable prices?
Hey, Maria, that's a great question. I think first off, we see a lot of patients that come onto the platform that have already experienced GLP-1s. And I think there's no shortage of data to support this. I think a huge portion of the population has started, tried, and unfortunately, churned off of them. And that data is quite public. A lot of it, as we've talked about, muscle loss concerns, extreme nausea, extreme vomiting. So what we do from a medical standpoint in partnership with our clinical advisors and clinical leaders is build the information and intake to allow for essentially an understanding of their existing situation, whether or not they've tried them before, their side effect sensitivities, their nausea sensitivities. There's a tremendous amount of personalization with these medications with regard to actual goal weight loss, right? No individual body is the same. No individual person has the same ideal health outcomes. And so I think the idea of a single dose regimen for this medication, especially given the extreme side effect nature of it and also the extreme efficacy of it, is actually really well tailored. So with all of that information, that then gets piped into the EMR within the platform, served up to the provider, and in partnership with the provider's expertise and their experience, as well as MedMatch, which is able to educate the provider on similar patients with similar dynamics and how they've had great outcomes. Those decisions can be made between the patient and the provider.
Great, that's very helpful. And then can you maybe talk about how the shortage ending could impact the competitive setup and some of the dynamics among platforms that have been offering compounded semaglutide?
Yeah, I mean, we are pretty clear with regard to what the regulations state. So my expectation is most parties in market that have been offering commercial available doses of semaglutide will cease to do that in the next couple of months. Again, the FDA outlines very clearly when you can and cannot compound, one, during a shortage, which has now indicated is no longer. And then second, when there's a clinical necessity for that personalization through the A facilities. So I think on an ongoing basis outside of the next quarter, as commercial doses come out of the market, you'll see probably a smaller amount of personalization happening through the A for those that are clinically requiring that level of tailoring.
Got it. That's very helpful. Thank you very much.
Your next question comes from the line of Craig Hettenbach of Morgan Stanley. Please go ahead.
Yes, thank you. Outside of semaglutide, can you talk about just rough expectations for liraglutide in terms of possible timing for this year? And then also an update on the oral weight loss drugs. You've mentioned on prior calls as well, the 100 million run rate. Just, are you sustaining some of that momentum or, what's the latest on the oral side?
Yeah, thanks for the question, Craig. We see the oral business continue to remain incredibly strong. And so the guidance of expecting at least 725 million of revenue contribution from our weight business effectively excludes any contribution from the commercially available dosages of semaglutide. We set the guidance typically based upon what we have line of sight to today. There's a few things that we do know hold true, and we've seen the oral business benefit as a result of it. The first is we know that our subscribers value the benefits the platform brings beyond the medication. Consumers are very motivated to lose weight and have a holistic platform to do so. We also know that consumers are looking for help and treatments from platforms that they do trust. So those are the elements behind one of the reasons why the oral weight loss was able to scale so quickly. We see continued momentum even when we have personalized or compounded commercially available dosages of semaglutide on the platform. Oral offering continue to remain quite popular as a result of broader eligibility requirements and as a result of many consumers just being candidly more comfortable with the modality. And so, as we look to what 2025 looks like, we do expect a continued meaningful contribution from our oral business. We're excited for liraglutide to come later this year. We expect those to be foundational pieces of the overall ecosystem for our weight loss specialty that can be supplemented, as Andrew mentioned, by the subset of consumers for whom personalized dosages of compounded semaglutide are an effective solution for.
Got it. And then just as a follow-up on the HERS platform reaching 30% of the business, outside of GLP-1, can you maybe just give some color in terms of some of the key categories that are driving traction on the HERS side?
Yeah, I think one of the things that we're seeing HERS really benefit from, first and foremost, is just many of the learnings that we had around marketing effectiveness from HIMSS, as well as strategies around personalization. We also brought over to HERS. What we also do see is that many of the categories for HERS are visible in nature. So things, in dermatology that are inclusive of both skincare as well as hair loss prevention for women remain incredibly popular. And so that is one of our fastest scaling specialties. We also, as we talked around at various points last year, see a very successful mental health business that is also thriving underneath HERS as well. And then the full ecosystem of weight, we're seeing that gain traction across both HERS and HIMSS. And so really we're seeing a healthy composition across multiple specialties driving the acceleration of HERS. And a large part of that is it's benefiting from many of the learnings that we had on the HIMSS side of being able to bring those over and drive faster acceleration to the HERS brand.
Got it. Thank you.
Your next question comes from the line of Eric Percher of Nephron Research. Please go ahead.
Thank you. A question on the transition beyond commercial semaglutide. Maybe question one, what happens to the patients and subscribers currently on the commercial product? How do you think about supporting them, and what portion do you expect would be viable for personalization?
Yeah, that's a great question, Eric. I would suspect we will have to start notifying customers in the coming month and two that they will need to start looking for alternative options on the commercial dosing. Obviously we have the expansive platform, whether it's the oral medications that are already out there, or if there is some reason that this patient would qualify for some level of personalization that exists. But I would suspect, just being very direct, that a lot of those patients will try to go into the open market and try to secure a branded option in some form factor. So, that transition is inevitable. I think that transition is going to have to take place and has been built into the guidance that Yemi provided.
And as you look out toward the end of the year, when you have Lyra and are building on personalization, do you have a feel for what portion of the weight loss population may be spread across those? Yemi, I might also ask you, I think we have 725 million as the goal this year. We know 229 last year for GLP-1, 100 for weight loss. Can you help us on the equivalent, or at least 100 for weight loss? Can you help us on the equivalent to that number of 725?
Yeah, I think what we're, what we would expect as we look to, the end of this year, given the fact that, we, as Andrew mentioned, are one of the platforms that has the ability to provide data insights to consumers. We also are a trusted and affordable brand. We do expect to see the oral based offering be quite popular, given the fact that, many other platforms will no longer be offering commercially available dosages of semaglutide. We are likely to receive benefits from that across both of our specialties on the oral side as well as liraglutide. And so I think that the competitive advantages that have served as a foundation for how we've been able to scale specialties in the past, the trusted brand, the value that we bring to consumers beyond the medication, will be a critical component of maintaining our existing ecosystem of subscribers, but then also continuing to draw a broader set of subscribers to the platform.
I would add there, Eric, one thing we talked about last quarter, I think, is, again, as Yemi mentioned, the platform's capability to deliver a more comprehensive offering, higher touch care, increased personalization, whatever the actual medications are, is delivering what we believe is really fantastic results. And so even when you think about the oral medications, which I think a lot of people forget, that's a category with that type of personalization that is delivering, I believe we shared 10% weight loss at, more than or less than half the cost of the semaglutide, right? Both the commercial and the personalization. And so I think there's a real group of customers out there. And I think it's overwhelmingly the majority that is looking for handheld care. And we can help achieve weight loss in different ways and different mechanisms with different treatments. But I think that's why there's a strong degree of confidence in the delivery of that 700 plus this year without the branded medications or the commercial doses, just because I think what we see under the hood is patients really need help. They want to be cared for. They want that high touch. And that's really what the platform is able to deliver for them.
Thank you.
Your next question comes from the line of Daniel Grosslight of Citi. Please go ahead.
Hi, thanks for taking the question. I just had a numbers question here on the GLP-1 contribution this quarter. So it seems like for the full year, you guys were at, Yemi, did you say 225 million or so of GLP-1 contribution? In my model, and frankly, I could be off in my model, but I had you doing around 75 million in 2Q and 3Q. So that would put the fourth quarter GLP revenue, somewhere in that $150 million range, which would be a pretty nice step up quarter over quarter. But then it does also imply very limited or even declining sequential growth in non-GLP revenue from 3Q to 4Q. So just wanted to put a finer point on GLP-1 contribution in the fourth quarter specifically. And then maybe if you can comment on the quarter over quarter trends in the non-GLP-1 revenue. Thank you.
Yeah, thanks so much for the question, Dan. So I think across the year, both on the full year basis as well as within quarters, the vast majority of the revenue is still coming from the non-GLP-1 related offering. We still see, that the overall tenured specialties remain quite durable. Much of the increase in personalized subscribers that you're seeing, that number drive north of 55%, is driven in part by the continued shifting of subscribers to those categories. So overall, I think it's we're not necessarily speaking on a quarter to quarter basis of the performance at a specialty level, but we do see the overall core specialties outside of GLP-1 remain quite durable as we start to bring on some of the capabilities that Andrew mentioned in his prepared remarks, such as lab testing, and bring greater precision around personalization. And we do see the ability for that to strengthen even further as we've seen acceleration in some of our tenured specialties in the past.
Okay. And then on, as we think about that 725 million of weight loss guidance for this fiscal year, I'm wondering if there's, is there any way to partner with some of the branded companies out there? One of your competitors does have a partnership with Lilly on tirzepatide vials. I'm curious if you would pursue something on the branded side of GLP-1s outside of liraglutide, or are you going to kind of stick with your knitting on what you got currently?
Thanks, Daniel. Yeah, great question. We've spoken to both of the leadership teams at Novo and Lilly, and looked at the deal that Ro did with Lilly and Lilly Direct. It's not off the table, right? I think the branded medications, without question, and we see this on our platform today with branded Viagra and other branded products, there is a subset of people that always want to get them. I think right now what is challenging is twofold. One, the actual reliability of sourcing those medication and not to be kind of snickering here, but we still really can't actually source the branded medications from our pharmacies for our own platform. And so there is a limited supply in a way that prevents us from having any durable offering on the existing Hims & Hers platform at the scale that we offer it. Obviously for other players who have smaller scale, that's a different story. But that is still a challenge. And then I think the other thing that is a challenge is just the reimbursement rates are continuing to go down. And so frankly, the reliability that we can say to a patient that, hey, you're going to have this price and here's a guaranteed kind of locked in experience is kind of crumbling a little bit. And so I think we still need to see how that pans out. From a customer relationship standpoint, we want to have consistency. We want to have price transparency, like we've always talked about. We want to have seamlessness, and the current ecosystem across supply chain, reimbursement rate, cost, just really doesn't hit those marks in any way yet. Hopefully those do change, right? Because again, as a platform that likes to be Switzerland, we benefit from having more offerings on the platform. And our patients also benefit. So I think we're keeping our eyes open and seeing how the dynamics change, and always have a really open conversation with any of those companies that can be helpful in getting more breadth to the platform for these patients.
Makes sense. Thank you.
Your next question comes from the line of Ryan McDonald of Needham. Please go ahead.
Hi, thanks for taking my questions. Congrats on a great quarter. As we look at the GLP-1 business, you talked about personalized and commercial. Can you give us a sense of what the rough mix is across that? And then, as we get past Q1 here, is there any risk, whether it be from a legal or regulatory perspective, on continuing to offer the personalized version in your view? Thanks.
Maybe I can take the first part, and then we'll hand the second part over to Andrew to address. I think we initially launched the platform with just commercially available dosages. What we see in general on our platform is, as Andrew mentioned, many of the folks that are coming to our platform have come and have had struggles with GLP-1s in the past. That was a genesis behind one of the reasons behind why we very quickly looked to roll out the personalized dosages as well. And so we see between that as well as the other benefits that we offer on the platform, the high touch provider engagement, is that given the fact that many folks have already experienced side effect concerns with the commercially available dosages, a majority of individuals on the platform today are utilizing personalized dosages versus the commercially available dosages. Andrew, you want to take the second part?
Yeah, sure. Yeah, I think the regulatory framework for the allowance of personalization and actually what that means, right? To Maria's question, the documentation, the clinical necessity of it, what the actual experience of it looks like, what personalization means from an actual dosing standpoint and a difference from commercially available drugs. All of this is very clear and regulated. And so, we play by the rules, and the rules are quite clear. And so I don't expect there to be meaningful conflict when it comes to the personalization standpoint. I think historically, the broad industry, inclusive of the pharmaceutical companies, have recognized and respected, I think, the need for this type of clinical personalization of medications. I think what they have always really had issue with, understandably, just given the bottom line implications, is the mass scale production through the 503Bs, right? Commercial mass scale production is something that they would prefer doesn't exist. It is, again, regulatorily allowed, but with that closing as a result of the shortage, I think you'll see a meaningfully smaller number of players in market. I think the necessity for kind of a high filter of who those customers are and what the experience looks like and how it's documented will be very important. And ultimately, I think will be respected by most of those industry leaders.
Thanks. I appreciate all the color there. And then as you think about the liraglutide launch, any more specifics you can give us on sort of what we should expect in terms of the timeline for when that will become available on HIMSS? And then, how are you thinking from a pricing strategy perspective for generic liraglutide relative to the ranges that you have of orals at $70 up to, compounded GLP-1 at, $165? How should we think about where that could come in the pricing range here? Thanks.
Yeah, it's a great question. From a timing standpoint, I would expect sometime, mid-year or early second half of the year to bring that to market. On the pricing side, our ambition is always to bring this to market in the most mass affordable way possible. Now, with liraglutide, it's a bit of a challenge because you have, more medication that's needed, given it's a daily injection versus a weekly injection. You've got more sterile needles that are required on a weekly basis, given this. So, everything from raw API to packaging is more expensive. So I would suspect that there's going to be some trickle-down effect that results in this having kind of a similar price point to the commercial dosing in the couple $100 range. But again, I think our ambition will always try to get to scale quickly, negotiate either through our own third-party partners or through the verticalization of our own infrastructure to be able to then bring that price down over the coming year and bring it to people in a way that ultimately delivers great outcomes. And I think with liraglutide, the base level dosing has okay results compared to the newer generation GLP-1. But there's a lot of people that have very strong results when you pair it with other treatments, whether it's compounds on the oral side or healthy lifestyle or calorie deficit or even personalized doses of the liraglutide. So I think we have a lot of excitement for that medication because we think it will be a nice thing to add to the arsenal and be very successful for a certain group of people.
Your last question comes from the line of Aaron Kessler of Seaport Research. Please go ahead.
Hey guys, maybe just on the for the testing, you kind of mentioned menopause testing as well as low T or low testosterone. Any thoughts on timing potentially for that offering, and then just maybe how to think about sub growth versus revenue per sub for the year as well. Thank you.
Yeah, thanks, Aaron. We're really excited about the whole body testing. I think you'll hopefully see us start to get that in the market in the first half of the year, but if not early second as well, as we integrate Tribe in. And that's going to really unlock, not only more precise treatments, vitamin supplementation, but also I think multi-condition treatments, because you're able to really start to get early biomarkers for things like metabolic disorders, insulin resistance, cardio disorders on the lipid profile side. So I think there's going to be a real expansion opportunities there that can expand, not only the number of customers that are coming to us every day, but also just the stickiness of the relationship. And then Yemi, I'll let you speak a little bit on the second half.
Yeah, so on the second half, we do expect continued expansion on revenue per sub. I think the pace of that, will vary depending on a few factors. One is just, as Andrew mentioned, as we start to roll out more multi-condition treatments, those typically carry a bit of a premium to the existing treatments on the platform. So that will drive some expansion. And as we see continued adoption on both the oral as well as liraglutide in the back half of this year, that's likely to yield some expansion in revenue per subscriber as well.
Great, thank you.
There are no further questions at this time. With that, ladies and gentlemen, that concludes your conference call. We thank you.
All right, so I don't know if I got excited about the company from that call. I'm definitely not more interested than I was before the call. Again, I missed this ticker because I was never interested in the industry. Still not interested in the industry. Given the macro that we're seeing right now, we got Bitcoin getting nuked after hours. I don't think this is a dip buy. I mean, look, the Hims bulls will swear this is a dip buy, which probably they're right. Down 20% off a quarter like this, outside of the adjusted EBITDA guidance for Q1 being a little bit lower. This was a phenomenal quarter. I don't know if anything's a dip buy right now. I mean, I'm one of the biggest hood bulls you'll find, and I have not bought the dip on hood over the past 2 weeks at all from this 20% dip. And part of the reason is because if Bitcoin gets hit, hood gets hit. If the broader market gets hit, hood gets hit. And it's just one of those things where you don't need to be super aggressive to buy this. Hims has the disadvantage of a 30% short float, and those shorts are going to feel very, very encouraged to continue piling on their short. Probably will cover the cover that they had a couple of days ago when it was at 70. So I don't know if this is a dip buy. It wouldn't be surprised if this thing goes into the mid 30s. Wouldn't be surprised if it rebounds back into the 50s. But it's down 20% for a reason. And that reason has to do with the adjusted EBITDA guidance for Q1 and also probably the lack of a reasonable thesis from management on the semaglutide shortage. Now, granted, I think their answers were not bad, but I mean, given we're looking at the stock price, their answers definitely did not instill a ton of confidence in the broader market right now. But outside of the earnings, the market's tanking after hours again, and that's probably not the best for Hims. Palantir 89.65. It hit 89.07 at one point. That is a new low for Palantir ever since the earnings. You got NVIDIA that's somewhat up actually after hours, which is nice to see. Wednesday is going to be really important because if NVIDIA doesn't crush it, I don't even want to know what happens to this market. But CleanSpark's down after hours. MicroStrategy down another 3% after hours. SoFi down another 1%. Oklo down another 2%. Microsoft flat after hours. Vertiv down a little bit. Nebis down another 1% after getting hit 9% during the day. Netflix down another 1% after being down 2% during the day. Grab down another 2% after hours after being down 1.5%. I mean, Tesla's down 0.5%. Uber's down 0.5%. Pretty much everything. Robinhood down 2.1%. SMCI, no 10K yet. Down 1.6%. This thing was at 66. Now it's barely holding above 50. It's just red. It's just red across the entire board. Why is the market getting hit today this bad? Well, I think there's a couple reasons, and we can kind of end on this. I think, and you guys can give me your answers as well in the chat for what you're thinking for why the market's getting hit. I think the threat of tariffs is still up there, and Trump reconfirmed his commitment to tariffs, so that's something that the street has to deal with. I think Walmart really spooked the market when it comes to the consumer, and if the consumer is going to definitively be good or not. That's probably spooking the market. And then I think everyone's scared about NVIDIA. Like, it's actually really on time to get this type of seasonal drop. This happens every single year, at least for 2023 and 2024. Definitely, I remember last year we saw the same type of volatility before NVIDIA earnings. If NVIDIA crushes it, I think a lot of this kind of goes away and the market stops caring as much. But the problem is we've had 2 really good years. And so if the fate of the market depends on NVIDIA again, a 3rd year in a row, it's just how much excitement is there from buyers to be able to get in, even if NVIDIA pulls up a good earnings. And I don't know, can NVIDIA guide way beyond the street expectations? Is the guide already baked in? Is Jensen going to say anything that gets the market to think, all right, maybe this AI CapEx stuff is reaching a peak? Like, these are really important questions. I don't think any of us have the answers to it. My gut feeling is that AI is not over yet, and there's plenty of room for this momentum to continue, especially with what we've seen with Grok 3 and all the different use cases on models that are now appearing. But we don't know. We just don't know how this is going to end up playing out. As Tess says right here, another thesis on this is February is a great time to buy. February tends to be, especially in post-election years, a bottom. And like, we could be laughing about this in March. We could be saying this is still some more pain, but I look, I don't know what happens in the short term, but this is not 2022 in my opinion. I could be wrong, but I really don't think this is 2022. I mean, for this to be 2022, I think you need a combinations of a horrible macro. You need a combinations of really bad earnings growth. You need a combinations of the consumer getting hit dramatically. And we're just not seeing that in the labor market. Maybe we will, but we're not seeing that yet. And then you also need low liquidity. There's $7 trillion on the sidelines. There's plenty of liquidity out there. There's money that's waiting to get into these names that have not jumped the gun yet. And although Bitcoin's getting a little hit, I think there's plenty of money out there. Like, I mean, if things were to get ridiculous, like, because in 2022 things got ridiculous, right? Obviously, Palantir was at $6, Tesla was at 100. Like, things got ridiculous. I think ridiculous. I mean, some ridiculous levels to me would be Hood going back to 30, Palantir going back to like 45. I mean, to me, Bitcoin getting back to 50K would be pretty ridiculous. Amazon going back to like 170, that would be ridiculous. Like, I think if we see those levels and earnings growth does not dry up, those dips get bought pretty quickly. Now, the problem is a lot of people that are in the markets are not going to have money to buy those dips. So you're going to need fresh capital to come in. And the question is just going to be at what velocity does that fresh capital come in? And I think they come in way before we get to those ridiculous levels, but I guess we're going to find out over the coming weeks and definitely after NVIDIA earnings to see how it plays out. Gatekeeper says this is just a nice reminder that wealth takes time. 100% agree. Wealth absolutely takes time, and everyone who's upset that they didn't time it exactly the way they needed to, it just doesn't work like that. And that's okay. That is okay. It is all right for this to take time. I don't think this is a time to panic. That's what I guess is what I'm trying to say. And look, if the data was saying, hey, it's time to panic, then I would be echoing what the data says. The data is not saying that yet. Just not, at least not at all the macro pieces of data that I look at, is this, oh my God, get really scared and panic. It's just, I don't know. I'm not feeling that these. I mean, look, and I've had those moments on individual stocks. Like I think CleanSpark's a great example. Like CleanSpark, I panicked back in January 2024. I got out. I made like 10%. It was like $1,000. I took that money and I was like, this thing is done, dude. Like I'm not going to stick around for this story. And so there have been names, at least in moments over the past couple of years, where I realized it's time to panic and get out. In terms of panicking across the broader market and getting out because of a 2022 type scenario, I don't see it. Not with this type of earnings growth. We would have to see a material decline in earnings in Q1, and then maybe it would become more evident. And, then after it becomes evident, it would probably be not as attractive to sell, given people would be already down so much. But I think you'd want that real evidence versus missing out on a strong year of growth and panicking off of seasonal weakness that tends to happen pretty much every year in February. And it also makes sense because when an administration comes in, especially post-election year, the administration gets people really excited. In this case, the Trump administration post-inauguration, and things got overheated. Like we saw at the end of January, early February. What happens towards the end of February? Things cool down because now the reality of the administration sets in and stock prices tend to reflect the reality of what they're going to have to deal with over the next 4 years. So I think this actually makes a lot of sense, especially in the Trump era, because a lot of the things that Trump is doing are not necessarily the most bullish from a short-term market perception, especially when it comes to tariffs. But the overall thesis around Trump, the market interpreted as very bullish back in November, and that's dying down a little bit. But that's okay. I mean, it was probably going to go down at some point. But HIMS down 20%, Palantir down 20%, Robinhood down 20%. I mean, this is very normal to me. Like I'm not in HIMS, I'm in Palantir and Hood, and I'm unfazed by it, dude. Even when Hood got to 65, as excited as I was, like in the back of my head, I was like, all right, let's see if it actually holds, right? Like it's got like the market's got to hold up for Hood to hold up. And obviously the market's not holding up, so Hood's not holding up. I mean, when you understand the thesis on the stock, you can kind of easily deal with it coming down 20%. I think a lot of people feel that in a lot of these other names as well. I mean, there's Tesla bulls that I've talked to over the past couple of, like Derek. Derek's been in Tesla for a long. Like Derek's like, look, I'm down a ton on Tesla, but I've been down a ton on Tesla before because he's held Tesla since 2010. Like he was there at the IPO. He knows how this name operates, and it is what it is. You got to be ready to deal with the volatility of a name like Tesla. We can't buy eggs, dude. The egg index has gone up a lot. So that is one thing I'll give you. That is not increased under Trump. I mean, look at this thing, bro. It is pretty aggressive, the egg index. So maybe when that comes down, we'll have a better understanding of if the market's in a good situation. But I don't know. I guess it's going to take some time for this stuff to resolve itself. The other good thing we do have is the Trump put, which is like, look, he's not going to let, I think, the market get as shitty as some people think it could get. Now, granted, maybe he's not in control of it, and maybe it ends up actually getting hit pretty bad. But if it doesn't, or if he has a way to stop it, then I think he would at least try to deploy that. Here's what Trump said this morning on tariffs. I mean, this also probably was not something the market loved to see, but here's what he said.
The tariffs, and it seems like that's moving along very rapidly. We've been mistreated very badly by many countries, not just Canada and Mexico. We've been taken advantage of. We were led by, in some cases, fools, because anybody that would sign documents like they signed, where they were able to take advantage of the American people, like has happened over the last long period of time, except for a little 4-year period that took place 4 years ago. But anybody that would agree to allow this to happen to our country should be ashamed of themselves. No, the tariffs are going forward on time, on schedule. This is an abuse that took place for many, many years. And I'm not even blaming the other countries that did this. I blame our leadership for allowing it to happen. I mean, who can blame them if they made these great deals with the United States, took advantage of the United States on manufacturing, on just about everything, every aspect that you can imagine they took advantage of. I look at some of these agreements, I'd read them at night and I'd say, who would ever sign a thing like this? So the tariffs will go forward, yes.
So, I mean, look, when he's advocating for tariffs like this, it's obviously not going to be the most bullish for the market. $340 million was liquidated from the cryptocurrency market in the past 60 minutes. We are seeing a bunch of coins get nuked. If we go to coin market cap right now, yeah, we're definitely seeing some pain right here. So Bitcoin down 4% in the past 24 hours, Ethereum down 10%, XRP down 10%, Solana down 14%. Solana, this is the blockchain for meme coins, essentially, got pretty hit badly. Dogecoin down 12%, Chainlink down 12%, Cardano down 10%. I mean, crypto markets are no stranger to volatility, but they are definitely seeing some pain right here. Let's check on Fartcoin. It was at 30 cents in the morning. It is at 27 cents. So down 16% on the day. I mean, still holding up 27 cents, but it is down. SMCI did not release their 10K yet. That one getting hit after hours as well. Robinhood 48.55, CleanSpark down 1.4, HIMS down 17, SMCI down 1.3, Palantir 88.90. There you go, below 89 on Palantir. Officially below 89 on Palantir with SMCI at $50.90. Also, big tech getting hit today. I mean, Amazon down another 2% after those earnings. Max 7, I guess they're going to need more time for the market to kind of rotate back into them. NVIDIA down 3% today, Tesla down 2%, Google down 0.2%, Amazon down 2%, Microsoft down 1%, Apple, the only one that was really green today with that $500 billion announcement in the morning. And then Meta, 740 to 670 real quick, 664 after hours, down 2.2% on the day. Definitely got some pain. Definitely got some pain, but also, I mean, the fact that most people are still green year to date, the fact that the S&P 500 is basically at all-time highs, it's a stock pickers market, and in that stock pickers market, we have seen volatility for certain stocks that people have picked, which is normal because you're picking stocks. But I also think that's just like not the most unhealthy thing in the world. I think what's unhealthy is people's mindset and being very like upset at themselves for not selling at certain levels. But what's healthy is Palantir probably taking a break, Hood taking a break, HIMS taking a break. I don't think that's scary to see. NVIDIA might flip the market. Well, Wednesday we're going to find out. We're going to find out. That's going to be a big one, dude. That's going to be the most important earnings ever because I don't know. Sentiment is pretty bad going into this earnings call, not just on the market, but on NVIDIA being like an AI powerhouse that's not Cisco, that's not cyclical. And I don't know. I mean, they're going to have to prove that they are definitely not cyclical. But Wednesday we will find out kind of what happens. All right, that is pretty much it. I'll be live tomorrow on the market open as well. Market close. We got a ton of earnings tomorrow. Obviously, NVIDIA will be important on Wednesday. Tomorrow in the morning, we have Home Depot. That'll be important for the consumer. And if it's similar to Walmart, we could definitely expect some volatility there. After the close tomorrow, we have Kava, Instacart, Lemonade, Intuit, Workday, and Lucid. And then AMC. Axon as well. So we definitely have a ton of companies tomorrow that we're going to be looking at. And then Wednesday's the big one. Salesforce, Snowflake, and NVIDIA. It's going to be really, really important to see how that one ends up playing out. All right, cool. Thank you, everybody. I know it sucks. I know there's some pain. It's been a good year so far outside of the past week. I get it. It's not fun to see, but I mean, if you're going to take a risk with your capital in the equity markets, this is just something that everyone has to get used to. And you know, I think most people have been here since 2022. So you've definitely felt the pain. Most people, I mean, a lot of you guys probably been here 2008, you know, before the volatility of 2022. So markets don't go up forever. They go up, they go down. And over the long term, you tend to build positions and names that hopefully go up, especially if you're going to buy individual names outside of the indices, right? If you believe there's a thesis, then those theses play out. But it takes time for them to play out. By the way, last thing I'll say before I leave, Arnie did post a thesis on a new stock. And I'm going to pull this up real quick. For anyone who wants to read his thesis, his link here is on Twitter. Apollo, ticker symbol APO. Arnie doesn't really get excited about new names too often. So when he talks, I listen. And he is thinking Apollo is Berkshire 2.0. So maybe I'll get him on the channel and we'll do a segment with him and we'll talk to him about his thesis. But if anyone wants to check out what he's thinking, that Twitter thread you can read for him laying out why he likes the name currently at these levels. All right, that's it. Thank you, everybody. We'll be back tomorrow on the market open. Bye, everyone. Have a good one.